Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We're now going to go into our Amazon earnings, and we're going to carry on with some of the comments that we had earlier. First of all, I need to do this. I need to open up the extra channel. The extra channel needs to have its music stop. There you go. And behind the scenes, there we go. All right, the extra channel is now up and running. This is the extra channel. People were listening to some music, and I've now turned it on. So now we are behind. If you want to watch behind the scenes, this is the extra channel. You can be in there watching behind the scenes. This is a 24-hour, 7-day-a-week stream. And this is me from the back, and you can watch from the back if you choose to do so. It then goes into all sorts of things, 24 hours a day. It never ends, other than when I have to reboot my computer, which is from time to time. But anyway, it's Amazon earnings now, so we're going to go straight into that. Let's get straight into it. And we did have some questions from the last stream. If you do want to ask them again, please feel free, and I will do it. Now I'm going to open up the phone lines. The phone lines, as promised, are open in this stream. There you go. If you refresh your screen now, they're open. If you want to call in, let me give you the link. It's the same link as we normally use, martynlucas.com/live. You do it through a browser. You don't require any equipment, any software, just through a browser. There is the link. In fact, I'll put it here, live phone in. There you go. And you need the password, which is LucasAids. Which is uppercase L, uppercase A, 100. It's case sensitive. Copy as it is in the chat. You can be on the show. You can ask me any question you want. You can call into the show. It's members only. Only members can call in. There you go. So if you want to be on the show, have your say, then you certainly can do so. All right, I see we have Akira back in, and Akira wants to know all about buying the dip, lowering the averages, and all that stuff, and why that is completely and utterly useless. And I'll explain that in a minute. All right, so we're all good to go, I think. Let's have a quick look. Make sure everything is streaming lovely. Yes, it is. I want to keep my eye on Amazon. Okay, the overall portfolio is there. All right, so let's start. I promised I would cover, if you want to phone in, the phone line is now open. So if you want to call in, feel free to call in. Let me just make a slight adjustment. Okay, here we go. Right. Let's start with your first comment, your question. Akira. Let me put this on the screen. So, why is buying the dip bad? Well, it's not always bad, but it can be. Any reason why SPX dropped? Well, we're coming up to the Amazon earnings. People taking profits. No more than that, really. Or she's here, Inspector Gadget. I'm not sure what that means. Will Elon and Jeff join forces on robot delivery? Depends on the dip, in my opinion. Hello, Mr. Bond, Midnight, Bob. All right. Okay, let's answer your question. Are we in general public mode? Let's make sure we are. Yes, we are. Okay. Now, can you see what I mean about the difference between a real business and none? We have 121 watching. We had over 600 watching the XRP. See the difference? Amazon will do well tonight, tell you how they're making money. No one cares, but they all care about getting rich in 5 minutes. You can see this over and over again. Anyway, it is what it is. So let me answer your question then. Here we go. So Akira. Why is buying the dip bad? Well, buying the dip is not necessarily bad. It's not necessarily good either. Buy the dip is a very, very simplistic term. It's very easy to advertise it, to sell the story. Very easy to get people to watch a video or pay attention if you say, buy the dip. It's very much like saying, we're going to the moon. What does it actually mean? Going to the moon doesn't mean anything. Going up 20%, 100% means something. Go to the moon, what does it mean? Nothing. Buy the dip, what does it mean? Nothing. To simplify it, of course, buying the dip means the stock has gone down, buy it. Okay, well, I don't agree with that. And I think it's a terrible thing to do. And let me explain why. When we buy a stock, what we should be doing, and what everyone does who's got money, real investors, multimillionaires, billionaires, I know because I talk to them and I surround myself with them. What they do is they buy great businesses that are undervalued. Don't miss out the second part. Not just buy a great business. Amazon, buy a great business. Amazon's a great business, right? Yes, but is Amazon undervalued? Not at the moment, it's not. So buying a great business is what you're doing. You shouldn't be buying stock. You shouldn't be buying shares. You're buying businesses. Because if you buy a business, you can own it. You can keep it. You don't have to sell it. It'll be worth more in the future. How do you know that? Because you've done your research. You've read the balance sheet. You've listened to the earnings reports. It's why we're covering the earnings report tonight for Amazon. We've done all of these things. We've done all these things, which tells us it's a great business. It's not a great business because I use Amazon. Not a great business because someone on YouTube said it's a great business. It's a great business because it's proprietary, it's unique, its margins are high, its debt position is under control, it makes great profit, it's got a good balance sheet, it's got a good management, it's well structured. The list goes on and on and on. So I can buy this, right? So when I'm buying a business, I'm looking to buy it undervalued. What's the best price I can buy for Amazon? Now, the best price doesn't mean, well, it's down a little bit today, so now I'll buy a little bit, buy the dip. It might still be too expensive. Got to wait. Got to have patience. You never buy anything that's overvalued. I mean, take stock market out of it. Would you, if I had a car and my car was worth $10,000, we know what it's worth. That is the price of this car, the real value of this car. Would you give me 50 grand for it? Well, of course you wouldn't, because you're buying a liability. Cars don't make any money. Most cars don't anyway. 99% of cars, they're a liability. On your tax report, they go down as an asset, but marked as a liability because they depreciate in value. They're not actually an earning asset. They don't make you money. Your home makes you money if you rent it out or it goes up in value. But a business, a car is an expense. So you can't just pay any price for it, because if it goes down in value, it's going to go down in value anyway. And now you've not been able to get your money back. So you've lost money on it. So if you look at a business the same way as you look at a car, I buy a business to make money, not to lose money. And it only makes me money if I buy it undervalued. Now you might say, well, it's going to go up in the future. Not necessarily. Maybe it's reached its peak. 80% of the Russell won't exist in 10 years. Not all businesses that are around today will be around tomorrow. Businesses come and go. Stocks in the stock market, in the S&P 500, are not around forever. Certain ones like Coca-Cola and J&J have been around for a very long time, but there are many that haven't been around forever and won't be around forever. They'll come in, they'll come out. So we have to remember Amazon is a great business, but is it a great business undervalued? No, it's not. So we can't buy it now, can we? Just because it's going to go up tomorrow or may be up tomorrow, that's trading. Trading is not the same as investing. Investing is you buy something undervalued for it to appreciate in value over time. That's what investing is. Trading is momentum. You're hoping because everyone's going to get excited, like crypto, everyone's going to buy it tomorrow, so it goes up. That's it. That's different. That's momentum. That's trading. Completely different. So now we've bought a stock, a business, we've identified when it's undervalued. We go all in. We make sure we get loads of it, because if we like it, we want to get plenty of it. Now then, we have bought this business undervalued. We're in. We bought our first 1 share, 10 shares, 100 shares, whatever. We own a piece of this business. Now tomorrow, it goes down. It dips. Buy the dip, I hear you cry. Well, if it goes down tomorrow, the chances are that would be a good idea, because you can buy it less than you bought it today. If you use toothpaste, I talk about it a lot. If you use toothpaste and now it's half price and you know you're going to continue using toothpaste, why not buy it when it's half price? Then you basically save on inflation and you can load up and you've got toothpaste for the next 10 years. I do that all the time on toothpaste, shaving cream, deodorant. There's lots of things that I buy where I store them and I don't have to buy them again. As long as you don't buy too many because they go off or you die, you get too old or whatever. So just bear that in mind. But buy the dip if the fundamental of the business hasn't changed. Well, we talk to a lot of people, and on this show, most people will say that they're buying the dip because the stock price has gone down. The stock price might have gone down for many reasons. Very often, stock prices go up or down based upon nothing more than momentum, nothing to do with the performance of the business. The business hasn't changed since yesterday. It's the same business it was yesterday. Still selling the same amount of Coca-Cola, still got the same margins, same employees, nothing's really changed. However, the stock might go up, the stock might go down. If you are buying the dip, you've got to know that the fundamental of the business has not changed. Not just buy the dip because buy the dip. So if the fundamental hasn't changed and the stock is oversold and you liked it already at this level and the macro and the conditions haven't changed, not the macro conditions, but the business conditions haven't changed, then you buy the dip. However, particularly with crypto, people say buy the dip, it's gone down, now it's cheap. What do you actually own? If you think about it, whether you own, or in fact, whatever crypto coin you own a string of code. Now we can say this string of code is more valuable than this string of code. But at the end of the day, that's only an opinion based upon popularity. Doesn't make any money. That string of code doesn't make you any money. That's not a can of Coke for $1 that I can sell to a customer for $2. There's no profit in that. It's just whatever someone's prepared to pay. So buying the dip on a crypto asset just means you get more at a lesser price. But was it the right thing to do? Well, with crypto, you can't ascertain whether the value's gone up or down because there is no value. It's purely based upon popularity, right? It's gone up or down because of people that are buying it and selling it. As we identified earlier, with the bull markets and the bear markets, they have a 4-year cycle. They're not like the stock market, which is always achieving profit and trying to make money. It's just a cycle it goes through. So if it goes through a cycle, what's the real value? Well, there isn't one, is there? Because the price of the asset has gone down purely because of the time that we're in. Well, then it's not based upon value, is it? It's based upon value if it can be measured by income. If there's no income and nothing's changed with the business, it's just every 4-year cycle, then it's just a popularity contest. There's no value to it. It's just the value is everyone's buying it. Well, that's not how value is identified. Value is identified, you put X in and Y comes and Y comes out. If you put X in and the only reason why Y comes out is because you put more X in, what comes out should be always more because you're putting in more. But it doesn't work that way, does it? So buying the dip doesn't work at all to crypto. I know you'll say, but it does. If I buy more, I've got more and it goes up, I make more. I get what you're saying. But when you invest, you're buying the dip based upon principles of value and investment and all the rest of it in calculations, not popularity or just a guess. Now, very often, and I can prove this to you as an example, when I started buying the S&P, I bought the S&P back in January of 24. A year and a month ago, I first bought the S&P, right? If I bought the S&P today, am I buying the dip? No, not compared to a year ago. I'm not. Of course I'm not. Some of my S&P is up 30-40% from a year ago. So I'm paying more. Is that a stupid idea? No, because actually the S&P is better value now than it was a year ago, because the S&P makes more money. Its forward PE, price to earnings ratio, is lower now than it was a year ago. So I can still buy it. Because if I can value the S&P of a value, what I put in is and what I get out is bigger. If I can still do that, if I can still measure what I put in and what I get out is going to be bigger, it's like me exercising. If I exercise, I'm going to put X amount of work in by running or whatever, and I'm going to achieve this goal. I'm going to achieve this level of fitness. And I measure that fitness worth more than what I put in. If I put more exercise in than the benefit, maybe it's not worth getting fit. I just, get old and die, right? Makes a difference. So the value of the S&P, even though the price is more today than it was a year ago, the valuation is still better. So I can still buy it. And I am still buying it. I last bought the S&P, however, about a month ago, because I always buy on a dip, because the valuation is still there. Not because it dipped, because the valuation is still there. It's very important to remember why you're buying the dip. You're not just buying the dip because you're buying the dip. Is it still undervalued, and has the valuation still increased? And the forward PE of the S&P is better today than it was a year ago. There's far greater businesses that are about to perform well inside the S&P, making it better value than it was a year ago, even though the price is more. So sometimes you can pay more for something and it's not a bad idea. Exactly the same as buying a house more than you could have bought it 10 years ago. It's cost you more. You haven't bought the dip, have you? You've bought it on a spike. It's gone up. It may be in a dip overall where we are in recent times, but it's 30%, 50% up wherever since a year ago or whenever you could have bought it, right? So buying the dip and lowering your averages is even worse. Lowering your averages is another trademark type of headline that people use. Lower your average. That's even worse, because that has no relevance whatsoever, because your average on the screen doesn't even make any sense. And I'll quickly show you that. I know you never asked me about this, but I'm going to show you again. You see, look, earlier on it had gone down. Was I bothered? I didn't even take the lights red. I left it because of people taking profits into the earnings. I know how it works. Just sit and wait, right? So anyway, if I look at my S&P, you will see, look, it says I've made $27,000 in profit. That's nice, isn't it? I've made 13%. I've made 13%. Have I? Have I made 13%? Well, yeah, you have. Look, it says on the screen you've made 13%. So you must have made 13%. No, I haven't. Yes, you have. It's 13% on the screen. Lower your averages. Brah, 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 brah. You've only made 13%. What's important is I've made $27,000. I've made about 30 to 40% on the shares I bought a year ago. The shares I bought a month ago were a lot more expensive. Doesn't matter. They were still undervalued, and I'm buying as I go. I'm going to be buying the S&P potentially for the next 30 years. Well, I can't buy them what they were 30 years ago, can I? That's why I use margin. I buy as much as I can to load up as much as I can. That's what I've done. I manage my margin. I buy the future prices today. I can do that because I've got an income, and I can always build my business and earn more money. So I can do that. But my average is 13%. Now, if you said buy the dip and lower your average, I've been doing the opposite. My percentage up is 13%. The reason why that is it's the average. The average. Well, the average means nothing. So why is everyone so passionate about lowering something that's worth nothing? Lower the average. Who cares? You got to look at the individual lots. And if we go back to the shares I bought in January, they're up 30, 40%. The shares I bought a month ago, they're up 0.5%. That's why my average is only 13%. What does it mean? Nothing. It's not important. Because over time, that average will get better and better and better by itself. Because the ones that I've made at the beginning, they're going to start to compound year in, year out, year in, year out. The ones I buy at the top, they're hardly moving at all. And the irony of it is if it was so important to buy the dip and lower the averages, why then does the average not move when you sell? It only moves when you buy. It doesn't change when you sell. Your average doesn't go up or down when you sell. Doesn't do anything. Stays the same. So that average is a useless display. So why is it there? It's there to encourage you to invest on the brokerage. Why? Because even Robinhood, when it's free to trade, make money because they wholesale the trades out and they always make money. So it encourages you to trade. It's not important. But again, on a YouTube thumbnail, YouTube title, you can't say all this. So YouTubers will say, buy the dip, lower your averages, go to the moon. It sells videos, but it's rubbish advice, doesn't help anyone. The only winner is the YouTuber who got some ad revenue from you watching it. What you watched was a complete waste of time. You've just sat through a lot of drivel. So don't do it. So Akira, does that answer your question about buy the dip and lower your average? Akira, did that help? Did that help? It's a very long question. Very long answer. But it's not a straightforward, simple thing. It requires a detailed answer. And hopefully you liked it. Okay. I can't bring myself to trust crypto. Well, what you're actually saying, Mo, is trust people. There's nothing wrong with crypto. Crypto is an emotionless, cold piece of digital data. It's people you can't trust, not crypto. It's people, because people are greedy and they're selfish and they'll buy it and they'll pump it and they'll dump it and they'll tell everybody else to buy it until they dump it. It's people you can't trust. Well, you can trust a business because a business just makes money. A business makes money. Crypto doesn't. You are relying on people. The difference between crypto and businesses is businesses make money. Crypto is people sentiment. What would you rather bet on? A business that sells products and services that makes money, or people being greedy and selfish? Obvious, really. There you go. Fight is not calling in. Very suspicious. Martyn, when would you do my Google review? Martyn, when would you do my Google review? Let's have a look. I'll tell you what I'll do. I'll do reviews tomorrow. I'll do a review day tomorrow. We've got the Friday phone in, but I'll do reviews tomorrow. I will do the reviews tomorrow, folks. Okay. Tomorrow is Members Day, Reviews Day. Okay. I'll do about 4 or 5. How do you feel about Meta? I don't like Meta I don't like Facebook to use it. I think it's rubbish. I get no engagement out of it at all, but it's a great business. It's a cash cow. How do you determine the true valuation of a company to determine if it's undervalued? Inspector Gadget, because I speak to CEOs, I have conversation with hedge fund managers, I look at the balance sheet, I look at the margins, the profit, the loss, who's buying, who's selling, the moat, inside trading, all of those things. And I've got lots of software and ways to find all that out. If you want access to my software, there it is in the chat. Help yourself. You get some free software and some free trials. Look for a search intrinsic value. Intrinsic value is not enough. Intrinsic value is not enough. That's why I analyze stocks. Thank you. SMCI and Mobix earnings calls next week. Nobody has booked in SMCI or Mobix. If you want to, or Mobix is booked in. Mobix is booked in February the 14th. Nobody has booked in SMCI. If anybody wants to book in, if you are a member of the channel and you do a minimum $5, I will do the earnings for you. Just bought 20 shares. I've lost so much on small cap stocks. I'm just going to wait a year. Well, I've said this time and time again. Why buy rubbish? Why do people buy rubbish? They buy cheap small cap stocks, the Russell, because they think it's going to explode. I buy quality stocks that no one even looks at, like Pacific Railways, like TPL. Not just the Mag 7, quality businesses. And I'd never buy the Russell. I'd never buy a stock that was in the Russell, purely on that basis. I love red days. That's when I do all my buying. That's correct. How do you know when to hold versus to sell, like NVIDIA? I don't need to sell. I never sell. I own the businesses. I own businesses that make me money. Shannon Davis. I never sell anything. Fight Channel, are you here? Will crypto ETF help stabilize crypto? Will crypto ETF help stabilize crypto? Well, people will say it does, but I'm not a great believer in that because I'm new to this, only 10 months in. That's okay. Oh, hello. We got a new member. I'm hoping that these flipping super chats are going to start showing up. They're not showing up. Why are they showing up? There's no reason why they're not. Recent events. They're not being picked up on Streamlabs at the moment. Yeah. I'm sorry about that, but I'll share it on the screen. Yes, it'd be great if everyone taps the like button. Yes, indeed. Yes, can everyone tap the like button, please? We've got everyone's asleep. It really, really helps the channel. Love what I'm hearing so far. Great stuff. If you as a member, you can call in, be on the show, talk to me directly. 100 thanks. Yes, thank you so much. There we go. Akira, I'm really glad it helped. You're very welcome. I'm glad it helped you. That's what it's all about. Breaking nearly all-time highs again. Yeah, making money again. I'm loving it. Different from Robinhood and Wealth Simple. What do you mean AC? What do you think about Intel? I don't like it. I don't agree with him on his politics, but he's 100% right on when it comes to crypto. Bella Capri, thank you very much. Your average price per share does change when you sell. When I sold shares in lots for a lost tax harvesting, it adjusted my average price by a lot. That's because you used lot selling. That's only available recently onto Robinhood. Most people have not been doing that. Stay away from Intel. Yep, I don't like it. Hello, Martin. Lestin Win. Is there still tariffs that are putting people on edge? Yes, correct. That is true. Surprised no one has called it. Or it's called in. Yeah, the phone line is open. The phone line is open. This is it. You know, people have the right and, well, not the right. You got the right because I give you the right. But you've got the opportunity to call on the show. Be live. Talk to me. There's the link. Call in on a browser. Have you talked about space yet, Captain Scarlet? No, I haven't. I've been doing a very long answer for one of our members earlier. I've got to focus on the members, Captain Scarlet. I have to focus on the members' questions. That's what I've been doing. What a market correction should we expect to see with Oklo, NNE? I've not studied those stocks. Don't know. Are you calling on the Mobix earnings? I'm hoping to be on the earnings call. Yes. Thanks for warning us to be careful about Palantir. Thanks for warning us to be careful on Palantir. It's up another 12%. What's that? Is that sarcasm? If you want to be a Palantarian, and I mean, you're literally walking straight into Alex Karp's plan. All right. Alex Karp, who's fantastic at what he does with Palantir, he is the best salesman in the world. He's like Elon Musk. He's doing the same thing. He's even penned the term Palantarian. And he shouts at the screen and swears. He did the F-bomb and the S-bomb twice and told everybody that we're on a journey. People just follow him over the hill. But except the difference is, though, they pay no attention to the fact, if you look at inside trading, Alex Karp has been selling the shares. This was inside trading. All this. Alex is getting rich. You've got to think about this for a moment. This is about 240 times now over price. It's a good business, but it is the most expensive stock in the world. I'm not going to spend $240 on a can of Coke worth $1. If you want to, then that's fine. But I'm telling you the facts. If you want to just overpay for it, that's great. We are quality value investors. I never lose. I always make money. If you're happy to pay any price for any stock, then buy it. But I thought we were investing money, real money. And that is ridiculous to pay 240 times earnings. On Compromise One, just become a member. Boring stocks he means. What's that? Sounds like crypto is a very mistrusting environment due to the information being presented. It appears stocks are better to focus on other than crypto. Yes, well, not all stocks. A lot of businesses are run by crooks. There's a lot of businesses that we've had on the show, that we've talked about on the show. Mullen, FFIE, they're run by crooks. People that have gone bankrupt many, many times. People that have no intention of building a business. They do it to lose money on purpose. So not all stocks are good. How did you see that Palantir Karp was? How did you see that Palantir's Alex Karp was taking profits? Well, if I go into the insider trades, I can see that insider, and it even names the people as well. Let me just have a little look here. Hang on. Just bear with me. Takes a little while to get all this information, but I'll do it. If I can do it quickly, I will. Just bear with me. All right. Okay. You want to see here? This is inside trades going on at the moment. Palantir. CEO Alexander Karp, sell. The CFO, director, CEO, CAO, CEO Alex Karp, sell. Can you see it? These are all the directors, the CEO, the CFO, Alex Karp. Loads and loads and loads and loads and loads. I can be here all day showing you when, how much, and all the rest of it. Dates. What do you want to know? $1 million there. There was $1 million of sales. Look at that. Okay. So take my word for it. Well, don't take my word for it. But I'm showing you on the screen that Alex Karp and all the board are selling shares right underneath you. If you're okay with that, that's fine. I'm not saying it's wrong for them to take profits. I would. But what's wrong is getting everyone in the Palantarian club. You should never be in a fan club for a stock. I'm sorry if it's not sexy and rock and roll enough for you, but I'm not going to shout and swear at the screen, make my hair all scruffy. I haven't got any hair, just to make you all feel part of a fan club, just so I can pump up my stock at 240 times earnings and then sell it. That's immoral. That's crooked. That's it. That's dishonest. If you're okay with that, that's fine. No problem at all. But we won't do that on the show. I won't do that. SBI bought 1.3 million Neo. What's your thoughts on Ondo? I don't know. I've never looked at it. I'll call in. Tree Guy will call in then. The phone line's open. You want to call in, be on the show? The phone line's open. There you go. Why Palantir now up to 110? Because Alex Karp has got everyone fired up to join a fan club. And they're going, oh, it's cheap. It's only it's only $110 for a share. It's 230 times earnings. What's fair about that? Well, that's up to you. If you want to buy it, that's absolutely fine. We got Northern Tree Guy live on the show, and bring him in a moment. SMCI earnings call locked in. Yes, it is. Palantirians sound like a cult. It is. It is. I mean, look, don't take my word for it. I'll just prove it to you, right? PLTR. Now, due to its recent earnings, the forward PE has come down a little bit. Remember what I said to you a moment ago about the you can buy the dip? Not necessarily. The price of Palantir valuation has gone down from 230 because even though the price has gone up because the valuation of the company has got bigger. So that shows you what I mean about you can pay more and actually get better value. So right now, Palantir is better value at 112 than it was at 90 because it's earning more. So the percentage has dropped from 230 down to a very, very cheap 181 times. There you go. Palantir, 181 times. 181 times. Still one of the most expensive stocks in the world. But it's better value than it was before because it's earning more money. That is a very, very clear example of what valuation is all about right there. But look, no one is saying buy. No one. Wall Street are not saying buy. AI software, which outperforms the S&P, is not saying buy. That's the AI software, quant, hold. Nobody who does the calculations, who understands, is saying buy. People don't care. They'll buy anyway. Why? Because they think that Alex Karp is their savior. Well, he's selling it. He's making money for himself. Just bear that in mind. And he swears a lot. I mean, have you ever heard a CEO swear F-bomb and S-bomb twice on an earnings call? No, you won't. It's done to excite retail investors. And it works. Look at the valuation. F. As low as you could possibly get. Anyway, it's now time to bring our guest into the show. Northern Tree Guy is here. How are you, Northern Tree Guy?
I'm good. Just trying to stay warm.
Trying to stay warm up there in Alaska. It's lovely to have you here. Really, really good. I'm glad that you're well and all the rest of it. So what's up? What do you want to add to the show today?
I just thought I'd join the camera and hopefully get some more people on here, get some more conversation.
We can have 10 people at once calling in. So if you want to join Tree Guy, we can have 10 people on the screen at once and we can debate anything that you've heard. Oh, yes. Go on then.
Yes. Give me 1 second. I got something.
Oh, you got something. Oh, hello. Hang on. He's got something. Well, I'll come back to you on the camera in a second. Palantirians sound like a cult. Well, it is. Thanks for the answer. Love the show. You're welcome. Just played your previous live show on Bitcoin XRP. At last, I have found a YouTuber that talks sense about crypto. Gibbers Buttle, let me just tell you so we can be absolutely clear. I am not a YouTuber. I simply broadcast on YouTube TV. I was voted by Sir Elton John as the world piano man. I performed all over the world, doing theatres, concerts. I've had my own Vegas show. This is my music channel. Look at this. I've done, when Wings tour America, I take the part of Sir Paul McCartney. I'm not joking. This is real deal. This is my music channel. Here's a little clip. Look. Let me just give you a little clip. Right in front of me, speaking wise wisdom, let it be. Okay, I can't share you any more than that because of copyright. But if you want to follow my music channel, there I am. You can see me in my own Vegas show. I did the Phantom of the Opera. I mean, I've got all kinds of stuff. Here's my Vegas show, and I'm dancing with all the showgirls. Look. I'm gonna have myself. There you go. So I'm not actually a YouTuber at all. So I thank you that you're enjoying the show and you like it, but just want to be absolutely clear. I'm not here to sell videos. I don't need to sell videos. I just like helping people and doing the right thing. That's it. That's all it is. Look at my portfolio. Another all-time high. If that goes to 400, 500, another all-time high. Making money again. Are you getting bored with me? Are you getting bored with me consistently beating the market and consistently making money? It's very easy to do. Everyone could do the same thing. I'm not doing anything clever. All right, here he is. He's back. Northern Tree Guy. What have you got?
So I was going through a rabbit hole the other day. Found a YouTuber. He's got these awesome these cups. I don't know if you've seen them before. They're beautiful.
Oh wow! Look at that.
Even it's got the signature on there as well.
Yeah.
Beautiful cups.
Nice, right? I'm glad you enjoyed it. Thank you so much indeed. Thank you. You sent me a picture. You sent one in already, didn't you, on Discord? Didn't I see one earlier?
Yeah.
Yes.
Yeah, I put one on
I've added
Discord.
that to the playlist, so I will. I'm going to add these on the screen soon. We're going to have them all around the screen. So thank you ever so much.
Yeah, I had to get the free advertisement on there for you.
Yeah, thank you, mate. I'll give everyone the shop link. There you go. There's the link in the shop. It's martynlucasshop.com, as you might expect. All right. So no one else calling in at the moment. I'll just keep you on the phone line a second as I get through these comments, and I'll hopefully we'll have more coming in. Let's have a look. Where you get that information? What information? All the software I've got here is Alpha Spread Seeking Alpha, but most of my information, and there's a link in the chat, most of my information I get is by talking to CEOs, hedge fund managers. I had a CEO on the show today. Building relationships on my X and Instagram with real investors, large investors, lots of millionaires, one billionaire. I've played in Mark Cuban's house, Jerry Jones' Halloween parties, the guy who owns the Cowboys. So, that's how I know what I know. XRP Army sounds like a cult too now. It is. That's exactly what it is. It is like that. Doesn't make it a bad investment though, but the way it's being promoted and hyped is certainly based around everyone buy, don't sell. I mean, even, what's his name? Mr. Michael Saylor will often keep saying, do not sell your Bitcoin. Can you imagine Tim Cook coming on, or Panchai from Google and saying, do not sell your Google? Can you imagine Tim Cook shouting at the screen, going F-bombs and S-bombs? Join the Googlearians. Well, of course you wouldn't. Of course you wouldn't do that. It's not a cult-like following, is it? It's just a straightforward business. PM really looked off lately. PM really took off lately. Smash the like button, Vanessa. Yeah, do you know what? I don't know why. We've got very slow today. People tap the like button. Come on, guys. Tap the like button. Sure SPCE, Val saying. I've know why he either says margin or short. Never understood why. I don't do either. Never will. 45 minutes late. What's 45 minutes late? I was early for the show, and I'm early before the earnings fight. What do you mean I'm late? Are you calling in? Fight channel, nice cup, Midnight Bob said. Yes, it is. Nice cup, says Vaz. Yes. Very talented and amazing singing voice. Thank you very much, Kit Kat. I do 14 voices in 7 different languages. If you give me a super chat right now in the show, all right, I can do you right now, live in the show, Michael Jackson, Michael Bolton, Paul McCartney, Elton John, Andre Bocelli, Pavarotti, Richard Marx, Sir Paul McCartney. Name any one of those, and you give me a super chat, and I'll do it live right now in the show. I'll basically sing to Tree Guy. He'll go, oh my God, I don't want this. My wife's over it. He's, yeah, sing me. All right, whatever you want. All right, and I'll do it in Bocelli and Pavarotti. I'll do it in Italian as well. Probably not because I have to go in 15 minutes. Oh, that's a shame. I might not be able to do it. I might not start for another 15 minutes. Fantastic. Thank you very much. Well, there you go. Make a request then. I'm not tonight, just making dinner. Now XRP is not good for this man. I'm not quite sure what you mean by that. XRP is not good for this man. Well, remember, when I invest, I don't join a fan club. because XRP doesn't join my fan club. It doesn't care whether I make money or whether it goes up, whether it goes down. No one really cares. So why should I join? Why should I join the fan club of XRP? I don't see any sense to that. All right. Who would have thought you'd sing and play the... Who would have thought you'd sing and play the piano? Very cool. Thank you, Spike. If you become a member and it's your birthday, I will do a birthday song for you live on the show. And if you tune tomorrow night, there's the link for the music channel. If you become a member, I will do a free song for you tomorrow night. No way you can do Michael Jackson. Yeah, okay. I'll tell you what I'll do then. Watch this. Right, how long have we got? We got 7 minutes. Right, here we go. Martyn Lucas. What's it called? You Are Not. I did a song with Michael Jackson when I had... where is it? Michael, You Are Not Alone. Michael Jackson. I had a video made for me with me doing a duet with Michael Jackson in theatre. And all over the world doing this. Earth Song. Not that one. I've actually got him on the screen. Where is it? Anybody? Not that one. Why can I not find it? Is that it? No. Okay, I'll give you a quick glimpse of this. Here's Earth Song. I can't do much for the copyright reasons. Right?
What about rain? What about all the things that you said?
I've got to be very careful about this.
What about killing fear?
All right, but there's a bit here. Martyn Lucas, One Night in Vegas. So how long have I got? One Night in Vegas. I did a Vegas show and I had Michael Jackson singing with me as a duet. You're all going, no way, I can't believe it. Can't be true. Well, it is true. Which one is it? Is it this one here? This is my Vegas show. This is years ago. Here's all the showgirls. And there's a bit here where you'll see Michael Jackson on the big screen and I'm doing a duet. Let me just get to it and I'll be able to let you see it. And you can see 2,000 people waving glow sticks in the air and stuff. Let me just get to it a second. And then I'll do the voice live for you because Namita's just given me a super chat. Where is it? There's Frank Sinatra bit. There's Frank.
Was your hair darker or did you have more?
I had more hair. You cheeky sod. Yeah. Right, you ready? I think it comes up now. Right. So if you watch on the screen now, you'll see Michael Jackson behind me. I think it's now. There you go. See him singing? That's me. I've got to pause it for the copyright reasons. Hopefully I didn't get a copyright flag. But there you go. So there you go. It's not making this stuff up. I got Elton John's jacket he gave me when I won the World Piano Man. I've got that as well. Right, okay. Who was it who asked for it? Freddie Mercury. We'll do it tomorrow night. I'm too tired to do Freddie Mercury right now. But I'll do Michael Jackson. You ready? Okay, here we go. Here we go. Now, if this, I'll tell you what we're going to do. If this, how long have I got? 3 minutes, because I've got to ring the bell, and then we've got the Amazon earnings. If this is the best impression of Michael Jackson, oh, where's my screen gone? Where's it gone? Show all windows. Where are you? Hang on. Studio One, options, desktop. 2. Oh man, hang on. This is throwing. Oh my God. What's happened now? Who can I blame? Options number. Oh, there it is. Oh my God, I busted it all. Okay. Where's my Google gone? Flipping heck, I'm in trouble now. I've lost all my windows. Stay with me. Stay with me. It's live TV, right? So that's gone up to there. Sorry about this. This is what happens when you show off. This is what happens when you say, I'm going to do an impression of Michael Jackson live on the show. Right. Okay, here we go. I knew I shouldn't have done this. Okay. Pop out chat. There it is. Ah. Well, now I'm trouble. I got 1 minute to go and I'm breaking everything. Okay, put that up there. Okay, I apologize for the technical issues, but this is live, right? There's no auto-tune or anything like that. This is just me doing it. Ready? Okay, here we go. Now, all I'm going to turn on is echo, reverb, all right? Hello? That's it. There's no auto-tune or anything like that. And here we go. I can do Tom Jones as well. I can do loads of voices. So here's Michael Jackson. You ready? If you think this is the best impression of Michael Jackson you've ever heard on YouTube by a guy who does an investment channel, you got to give me a $1 super chat. At the very least. How many people are watching? I've got 206, so I'm going to earn $200 now because everyone's going to give me $1 if you think it's good. If you think it's rubbish, don't give me any money. Right? You ready? Okay, here we go.
Another day is gone. I'm still all alone. Though you're far away, 'cause I am here to stay. You never said goodbye. Someone tell me why did you have to go? Leave my world so cold.
There you go. You could have Pavarotti, Michael Jackson, many, many more, Andre Bocelli, anyone you like. There you go. So, if you thought that was good, you got to give me a $1 super chat. If you thought it was rubbish, you don't have to do anything. All right, the bell's gone. 3, 2, 1. I got a super chat from Northern Tree Guy. I'm loving it. Thank you very much indeed, Northern Tree Guy. I appreciate it. If you want Tom Jones, Jerry, tune into my show tomorrow night at 4 o'clock. I'll do Tom Jones for you. I will do Tom Jones for you straight off. There's my music channel. It's on the homepage of the channel. You can find it here or tune in tomorrow night. Okay, we're about to get the news for Amazon. Have they beaten on earnings? Well, we're about to find out. Have they beaten on earnings? Let's have a quick look. Let's go over to CNBC. Let's go over to Bloomberg. Listen in. Let's have a quick look. Nothing there yet. Nothing there yet. Let's go to Amazon. Northern Tree Guy. Thanks for that, mate.
Yeah, no worries. I just I figured I better do it since I'm on call with you. I'd have to answer pretty quick.
Right. Hang on a minute. Amazon is taking a big dip now. Now, remember, when I bought Amazon a few years ago, when I bought it on the big dip, I got a 10% in 1 second. Remember that? When we got the earnings leaked. That looks like what's happened tonight. This has happened before. It's gone down 5%. Now, Midnight Bob, thank you, Midnight Bob, for your wonderful super chat. Here we go. Making money with Mitch. Thank you so much indeed. Khalid, thank you very much indeed. Look at all these super chats coming in. Josh Monroe, thank you ever so much. $2. Hey, I'm loving it, loving it, loving it. Thank you ever so much, everybody, for all the super chats. You know what I should have done? I should have done Michael Bolton for all the ladies because they love Michael Bolton. That's what I should have done. Right, Amazon. Let me symbols. Amazon. Let's have a look. Earnings. Stock mixes Wall Street wise through way. That's today. That's not yet. Earnings. Let's get Wall Street on the line. Need Michael song tomorrow. What, Michael Jackson or Michael Bolton or Michael Crawford? Which one do you want? I can do all of them. Or Michael Bublé. Let me refresh Wall Street. We need the numbers from Amazon. Let's get them up. Come on. Give me 5 seconds. I'm just refreshing this screen. Here we go. Amazon beats on earnings. 186 versus 149. It's a massive beat on Amazon, and it's sold. Now, here's a very, very good example. I've got the numbers for you right now. Here we go.
We just got in the top and bottom lines for Amazon, and the fact that cloud did come in as expected, 19% growth after we saw Alphabet
buying opportunity for Amazon right now.
Results disappointing as well.
Yeah, I mean, I think it probably says a combination of setup in terms of the buy side, have eyes for, let's say, revenue beats and what AWS was going to deliver, and then maybe a little something.
Oh, it's a huge beat. Now, let me explain, because you only got a couple of seconds. Let me explain very, very quickly what's happened here. A lot of people will say, hang on a minute, how come they've beaten on earnings, beaten on revenue, top and bottom line, everything about the stock is brilliant. Why has it gone down? This is what happens. This is a famous incident when I made 10% in 1 second, right? What happens with Amazon is always priced to perfection. No matter how good it is, it always sells off on earnings. Because what will happen now is everyone who's been in the stock for a long time, remember my friend who's got millions of shares of this when he bought it for pennies, people that are real investors that have owned this for a long time, they trim, they take profit, and then they buy it back. You now know that Amazon is great. Amazon is good for NVIDIA. So tomorrow, Amazon's going to be up, NVIDIA's going to be up, Microsoft's going to be up, the S&P is going to be up. So expect that tomorrow now. What we've got now is an immediate reaction. Everyone has overreacted. Not in a bad way, because remember, it's not like everyone speaks to everybody and goes, shall we all sell together? No. What actually happened was, the moment the data came out, Wall Street went, great, sell, take profit, buy it back. Because the moment Wall Street sell, everybody else jumps in and starts selling, and everyone goes, oh my God, it's going down. And in a minute, it gets bought right back up again. And that's exactly what's happening as we speak. Look, all that retracement is making its way back up again. If you look over here, it was all the way down here, and it's starting to go back up again. And you'll see very quickly that just like Google wasn't a bad earnings. It did not deserve that. But that is a buying opportunity right now. It might last a minute, it might last a few minutes, but that is certainly a buying opportunity. A great, great result. And if you want the visual of how good that was, let me show you how good that actually was. Look at that. 23, 23, 23, 24, 24, 24. Look at that. One of its best beats for several years. Always trending upwards. Look at that. Why would you sell the stock? Well, for the very reason I've just given you. The business is good. We can sell it. We can buy it back. We can take a profit. We can buy it back. And that's what's happening right now. You're seeing a profit being taken, and then all of a sudden, it's going to go back up again. Guidance, I'm sure, will be good. We'll cover the earnings live in 55 minutes. We're going to cover it all live. What do you make of that, Northern Tree guy? What an opportunity to buy Amazon tonight.
Yeah, actually, I've been questioning the whole buying the dip thing, and as you know, I'm pretty new to this as well, and I'm kind of seeing as long as you're in the market for long term,
you win.
That's what it's about.
Exactly.
That's just what it's about.
That's what it's about. That's what it's about. Quite honestly, it's about time in the market, not timing the market. And people try to time the market. And the trouble is, and understandable, what you've got is you've got Wall Street and you've got retail investors. Retail investors try to emulate what Wall Street does. They fill their offices with lots of screens and go, look at me with all my screens, and I'm going to outdo Wall Street. Well, you can't. 95% of traders who are experienced with all the screens and all the technology still will not outperform the S&P. And if you took profit now, then it's when do you get back in again? And remember, if you take profit, you've now got to pay 20% to tax anyway. And if you keep doing that over and over again, you could actually end up going in a higher tax bracket because of all the profits you keep making. But then when you buy back in, you might end up buying back in at a higher price. You've just found out today from the CEO and the CFO that Amazon has done it again. If you bought this business years ago, like my friend, Big Ed, we call him on the show, he never sells his shares. He never sells his shares. And he's very, very wealthy, and he just got it there. He borrows against it. That's how rich people make money. They don't actually they don't sell the business. They own the business because we've just found out again that Amazon are doing great. I bet their guidance will be okay as well. And it's every reason to own it, not to sell it. And the question you've got to ask yourself is, if you do sell it, where do you buy back in again? How do you buy back in again? Bearing in mind, you just lost 20%. So you've got to make sure that you buy 20% lower if you work out the percentage. Because if you just buy the same price, you've wasted money, haven't you? You haven't gained anything. So you've got to get it lower than where you sold it. And then hold it again then for it to rise again. Anyway, it's a good night for Amazon. I can't wait. I'm sure my S&P will be down if I look at my S&P right now. Oh, actually, it's still up. It hasn't even bothered it. That's the strength of the S&P. And the reason why the S&P has held up, it has dipped. You can see it did sell off a bit. The reason why the S&P is still up is because Amazon is in tech, even though we think of it as a shopping platform. It's tech, right? Tech sector is underperforming the financial sector and the defensive sector. So even though Amazon and we had Google sell off yesterday, my S&P is still up because the other sectors are outperforming. That's the benefit of the S&P. Now, what's going to happen is over the coming months, Amazon and Nvidia are going to get bought back, and the S&P is going to go even higher. I haven't got to do anything. All I've got to do is own it and wait. And like you just said there, it's about time in, not timing the market. Anyway, James, you should finally call in tomorrow. Be a good party. Thank God I'm done with small caps. Yes, when do I get back in? Uncompromised one. Do you want to call in and be on the show? It's your very first time. I would love to get to know you, talk to you. We can have 10 people on the screen at the same time. Tree Guy would love to meet you. He's from Alaska, up there in his log cabin. He literally is in a log cabin in the snow. We love it. Real wood. The outside of that wood is the wilderness, is the snow and Alaska. Beautiful. You want fresh air? Go and stay with Tree Guy. He literally lives in a log cabin in the snow. For real deal. This is. Do you ever get any bears, Tree Guy? Do you have any bears to
So it's a funny story. I haven't seen too many bears, so I've been up here about 3 years. I've seen like 3, 4, 5 or so. But we did have a grizzly and her cub come through our neighborhood here, destroyed like 9 chicken coops.
Ooh, yeah.
And a lot of people, they don't realize how big these bears are. But if you they literally took my neighbor's chicken coop, it's a 12x8 shed, and flipped it on its roof.
You couldn't do that, could you? I couldn't turn it on its head.
Yeah, it's incredible to see some of the size of these animals up here, but it's really neat.
Yeah, absolutely. Wonderful. Out there in the environment. I'm loving it. So anyway, Uncompromised One, if you'd like to call in, you can be on the show. I'd love to have you on the show, and it'd be fantastic if you want to call in. Did we get any more questions? Profound. Time in the market, not timing the market. That's absolutely right. Absolutely right. What are you smiling about there, mate? What are you laughing at?
Oh, Midnight Bob's making me blush.
You don't have to be a good-looking guy like Tree. I call in, Martin puts me... Go on, Midnight Bob. Why don't you call in? That's right. Okay. Now then, we're waiting for the call to start. Let me just refresh the earnings call. We've got a ways to go, but let me just refresh my software for the call. It wants me to be back here 15 minutes. So we got half an hour before the call gives me its presentation. So I'm going to do that. I've got a poll running right now, and I'd like to get everyone's opinions on this. I've just put a poll out, and I asked you the question, XRP, Ripple, and Bitcoin, danger warning. The question is crypto in danger? Is crypto in danger? Let me give you the link. It's on our community pages on YouTube. It trends on Google, so you probably already found it. There you go. There's the link. And I'm asking you, is crypto in danger? XRP, Ripple, whatever you like, Bitcoin, whatever. Is crypto in danger? Yes, no, or undecided? Well, we've got no votes. Let's refresh it. Let's see what it says. In 5, 4, 3, 2, 1. You say no. 127 votes. You say no. All right, 57%. Now, that isn't very good, is it? If you think about it, 30% of you say yes, 13% don't know. So, in other words, the don't knows, the undecideds, I would imagine, are not in crypto, so that they just don't know. 30% of you say yes, but 57%, and obviously that's people that are in it. You wouldn't say that if you didn't. You wouldn't say it was great. It wasn't in trouble, would you? If you wasn't in it, more than likely, anyway. 57% is quite low, isn't it? Whereas if I asked you now, I mean, think about it for a moment. If I asked you, is the S&P in danger? I'd bet you 95% would say no. But 57% of you say no. That makes sense? I think that's quite low. And bearing in mind, I put that out on our XRP Bitcoin video. So it was all a Bitcoin crypto audience. Interesting that, isn't it, mate? I put that out into our crypto audience, and only 57% say, no, it's okay. I would. It's not good.
I find that funny because when I first came into your channel, I was all XRP crypto, and then the more I've watched you, I'm kind of like, doesn't seem like a good idea.
No, it doesn't really, does it?
No.
Well, I mean, at the end of the day, we can sit here all day long and talk about the technology. We can have technicians come on and tell us all about that. But no one who buys XRP or Bitcoin cares about that. You buy XRP and crypto because you think it's going to go up in price. Think about that for a moment. When you buy Amazon or Google or Microsoft or anything else, you're buying it because you believe the business is going to make money. That's why you buy it. You don't buy Google because you think it's just cool, because what's cool about buying Google or the S&P or Amazon? You buy it because you know it's a good business. It fundamentally makes sense and it's going to go up in price, so you buy it, right? That's why you buy it. Whereas with XRP, you don't understand the technology. How can you? You can say you do. Oh, well, it does this on the blockchain and blah, blah, blah. But most people don't understand how it really works. They've read how it works, and they can repeat a load of stuff about the blockchain and yada, yada, yada. But if you actually really went into depth with it, they probably have no idea. They just know the headlines, whatever. And it doesn't make any money. You just believe in it. Well, when you stand back and think about that, you start to think to yourself, well, what actually am I buying then? Well, what you're actually buying is everybody else buying it. And as long as everybody else buys it, you win. And everyone's going to hate me for saying it, but there's one thing that does that every single time. It's called a Ponzi scheme. Ponzi schemes make money when everyone buys in it, when everyone feeds into it. Okay, it's as simple as that. But, there it is. Anyway, crypto is in danger this year. Most people don't know, but where in the tariffs war. Well, yes, we are in a tariffs war. I don't think it's going to end badly for tariffs, though. I think Trump's going to let most of it go. But having watched him now for a few weeks and watch how he's working, I'm not too worried. Martin talking more rubbish. There's Fight Channel again having his little comedy. XRP is controlled and they can block your wallet, so it doesn't matter how much you own. No, I don't believe that for a second, Scarlett. You're saying XRP is controlled and they can block your wallet. So what you're saying is you buy into XRP and they can steal it from you? They can block your wallet? Well, if that was the case, no one would buy any crypto, would they? So I've got no verification for that. I've never seen any evidence. No one, and I talk to people who work at projects who actually work in this stuff. Sensei, of course, is our expert on crypto and charts and so on, and he's never told me, oh, yeah, you can buy XRP and they can just take it from you, because if that was a known fact, I mean, that would be the end of it. I mean, what would be the point of buying it? I thought after Trump asked to elevate Bitcoin reserve, it would have pumped. No, I didn't, Namisha, and I explained why. Because the very reason why everybody bought Bitcoin in the first place and why they didn't buy XRP in the first place, because XRP was centralized and it was going to be controlled, and people didn't like that. They wanted the maverick. They wanted the stock Sorry, they wanted the crypto that wasn't governed and it wasn't regulated and it was completely decentralized. So why would anyone then get excited and jump up and down because it's now got backing from the government? Think of the hypocrisy in that. The very thing that you don't want, you now get, and you think it's good for it. I mean, that's exactly the same as when we had Lightning 2 came out for Ethereum. I had everyone go, this is the greatest thing ever. Lightning 2 means Ethereum is a lot more efficient and it's faster and brilliant, blah, blah, blah. You can do all these things quicker. Lightning 2 is going to be great. Okay? And I made a statement. I said, makes no difference. Makes no difference. Yes, they've improved the technology, just the same as if you buy a car, right? Or a phone. Every year, the phone gets faster and better, a bigger chip, a better camera. Does the phone get more valuable? No. Does anyone really care? No. They just buy it because it's a new phone. Exactly the same. Ethereum didn't suddenly become more desirable. From a technical point of view, the scientists, the geeks behind it went, it's brilliant, it does this. Yeah, but no one outside of those guys cared. And you may remember when Ethereum Part 2 came out, when Lightning Part 2 came out, what happened to Ethereum? The day it came out, woof, it went down. It came back, but it was just buy the rumor, sell the news. Well, it's exactly the same. Now, what did I tell you 5 minutes ago? I gave everybody today free chance to make money. What has just happened to Amazon? Exactly what I said would happen to Amazon. I mean, some people watch my show and they say to me, I was watching yesterday, people say, Martyn's got a crystal ball. How does he always get it right? I don't always get it right. I just don't focus on selling you BS to sell videos. Anyone who knows how the stock market works knows this. I'm not smarter than anyone else. In fact, I know less than anyone else. Let's be honest. I'm no genius. There's nothing clever about me. I just have made the decision to tell the truth. I mean, it's not rocket science, really. It's ridiculous. Do you think all the people on Wall Street don't know what's going on now? Of course they bloody do. They're not sitting there going, oh my God, boys, you won't believe it. What? What's happened, Bob? You won't believe it. Everyone's just sold Amazon. Well, did that come as a surprise to you? Well, it surprised me. Well, why? Every time we get a good earnings, we sell Amazon. We've been doing it for years. Yeah, I know, but I've only worked here for 5 minutes. I didn't realize that. I was surprised by it. Well, we're not. We've been here. We do it every single time. But it kept on going down. Once we sold it, it kept on going down. Yeah. That's what the retail investors do. They all see it going down thinking, oh my God, I'm going to sell it as well. Oh, but then it's gone back up again. Yeah. We waited around for a little bit, let everyone sell it, and then we started buying it again. Oh, I see. And this happens every time. Yeah, and we keep getting richer, and the poor man keeps getting poorer. It's ridiculous. Oh, what do you say? Anyway, now before anyone says, well, it might go down again in a minute. Yeah, it might do. All that I care about as an owner of Amazon, even be it through the S&P, is I own Amazon, and I'm more happy to own Amazon now than ever. Why? They just told me their earnings was good. They just told me their revenue is up. I'm sure guidance is going to be up. There's going to be some CapEx. There's going to be a wobbly year with AI. We already know that. I've already priced that in. But do I want to own Amazon a year from now, 5 years from now, 10 years from now? Yes, I do, with the information that I have today. So do I care if people play silly buggers up and down in the next half an hour, No, not at all. This is quite funny. Anyway, I love this. That's the whole point of decentralized blockchains. Yes, the whole point is it's not controlled by the government, and now everybody loves Bitcoin because it's going to be controlled by the government. Think about that. Think about how stupid that sounds. I have read banks have to be signed into Ripple Ledger by March, something like that. Crypto Kings, no. That's not true. I've actually spoken to people. I've actually got some people on X who actually work at Ripple. I'm actually now talking to people at Ripple. And let me tell you, no one is telling me that. No one is telling me. I mean, a couple of days ago, I think it was on Monday, I woke up over the weekend and I saw a barrage of YouTube videos saying on Monday, all of Japan banks are going to use XRP. Did that happen? Nope. I said it wasn't going to happen, and it never did. That didn't stop YouTubers saying it was going to happen. Why did they say it? Well, do you really want me to tell you? Because everybody watched thinking, oh my God, XRP is going to got to $1,000 on Monday. So they made the video. I mean, do you know, I'm virtually at that point myself. Sometimes I have to stop myself from doing it, right? Today I knew, because most of my work now is not around XRP. It's around earnings at the moment. Just earnings, okay? And not many people watch. Nobody watched my Ferrari. Nobody watched my other stuff that I did on Pacific Railway and Pfizer. No one cared. And not many people will watch next week with Coca-Cola. Lots will watch with Nvidia when that comes on, but because it's like XRP, it's trendy and sexy. But all the other stocks in between, Landbridge, for example, brilliant business, but nobody will watch. And I thought, you know what? I'm going to go on this afternoon, which is what I did before this, and I'm going to earn some money. I'm going to tell the truth, though, but I'm going to put XRP in the title. You saw what happened? I had thousands of people just tune in for my XRP video, right? I mean, I wasn't going to say, if I'd said some nonsense, I would have got a lot more. If I'd put in the title, it's about to go to 5,000. Because remember, I never say that. So if I did that, I'd get a huge audience. I'd make so much money. For those of you who don't know, when I did the 60 Minutes, we got more views than 60 Minutes itself. When we did the interview with Brad Garlinghouse, CEO of XRP, when I did the XRP 60 Minutes, we had 130,000 people watch us live, and I earned just over $1,000. It was my biggest ever video. I've never earned anything like it. Most videos I earned $5. I earned over 1,000, right? So don't get me wrong. It's very tempting, because if I made a video saying I predict XRP is going to friggin' $1,000 tomorrow, I'd probably have 500,000 people watch, and I'd make about 3 or 4 grand. Do you know what? I think I'll do it. And then at the end, I'll go, only joking. Hey, do you know what? I could do that, tree guy. What about April the 1st?
Hey, this sounds like some free S&P shares.
Yeah, right there, innit? If I do XRP's going to $1 million on April the 1st, I'll get 500,000. I'll make about 3 or 4 grand.
So actually, Martin, I do have a question now that I think about it. So with the S&P, with the price that it's at today, is that an average based on all the companies?
Ah, good question. Yeah, essentially, right. So if you look at SPY, the other way to buy the S&P, and VU, there's several others, but SPY and VU are the most famous ones. They're different prices, but they move exactly the same. There's a delay sometimes because of the volume, but essentially they move the same. There might be a little second delay and a minute, but it's the same. Different prices because of the inception date. They were set up at different days, so they've moved. You know, they've got a different. One's ahead of the other one, right? But they move the same. They move the same because the allocation is exactly the same, bar 0.0001 difference. All right, it's virtually the same. So what happens is when you actually buy a share of the S&P, VU or SPY, which is how you can buy it, what you're actually doing is you're giving a piece of that. Say you put $100. So that's 100% of your money, $100. I think Nvidia is 6.7, or Apple's like 6.7%, all right, of the allocation. $6.70 goes to Apple. It goes into Apple, right? Because the management who run VU, they own all these shares in this allocation. They have 1 million of those and 1 million of those, all balanced out in the allocation that is how it's laid out. So when you buy a share of the S&P, you're giving them the permission, if you like, to buy $6.70 worth of Apple and $5.40 of Nvidia, and that's what happens. So if you add up what the share of the S&P is right now, it is essentially taking all those individual purchases and adding them up together and that gives you that price that you just paid. That money is equally gone into all of those different stocks. So when you buy VU, you're buying a stock. It is a stock. But it tracks the S&P. But the money goes in to all those stocks. That's why if we only bought the S&P, if nobody bought Apple and nobody bought Nvidia, no one bought any ever again, and we only ever bought the S&P, those stocks would still move the same way. They would still get that allocation. Okay. Now they go up and down because people buy them individually. They sell them individually, right? But essentially, if we all just bought the S&P, those amounts of money would still go into those stocks. Those stocks would all move exactly in line with the S&P. They'd be all the same. They'd all have bigger market caps because bigger money goes into Apple compared to Bank of America, which is like 0.001 or whatever it might be. It's lower in the allocation. So yeah, that's what happens. Does that answer your question?
Yeah, it was just more or less just me starting off looking long term, like, okay, is the S&P going to eventually be evaluated at $1,000, we'll say, long 30, 40 years from now, right?
Yeah.
Is that a possibility?
Oh, yeah.
So that was more or less my question. Like, as a, I remember when I was a kid, the S&P was $100 maybe.
I'm thinking 7,500 by the end of next year.
Wow.
Yeah.
Per share.
Not VU, the S&P, the index. The index. The index today, I think, is at 6.4, 6.25. Is it 6.2? Someone tell me. 6.2. I'm thinking the S&P will be about 7,000 by the end of next year.
Wow. Okay.
Yeah, I think my $260,000 that I've got invested without me adding any more money is going to 3x by the end of the decade. That's just the growth. So that's not me adding any money. That's just the growth. Because remember, the S&P doubles every 7 years.
Okay.
That's its average. But right now, we've got an AI industrial revolution going on. We've had this several times in history when big events happened, right? The one we have and one we're living through now is the AI industry revolution. And because the S&P is overweighted in tech, not as much as the NASDAQ, but it's good because we've got the other things that are sleepers like the defensives, and we've got the financials, which are going to outperform. Because remember, they're going to make more money because of crypto. Not because of everyone getting rich on XRP, because they can move money around more efficiently and more profitable. So banks are going to make more money. No one ever talks about that. No XRP, no crypto channel ever talks about the banks are going to get rich with the blockchain. They're going to make more money because they can move money more efficiently, and they make money when it moves, right? They're not going to do it for free. When you move your money on the banking system, they will be doing it on the blockchain, which is more efficient than Swift. So they'll do it faster and quicker and cheaper, but they'll still make more money because they'll increase their profit a little bit. Your price will come down, so you'll think you're getting a good deal, but they're making more money as well. So that's why the financial sector, why I often talk about the financial sector going to outperform tech, because they're the ones who are going to benefit from crypto. Not from buying and selling coins and messing around with Binky Bonk, but the actual network it lives on, that's where the real money is. So by owning the banks, by owning financials, by owning the S&P, which owns the banks, you're going to benefit from crypto and AI without doing anything.
And I think you're the only one that's ever mentioned, about the real investors are going to make money off the institutions, not the Bitcoins and all the other stuff itself.
I know. See, this is the thing. People go, oh, Martyn Lucas, he's against crypto. Martyn Lucas is against... No, I'm not. I'm actually for it. What I'm against is gambling and speculating on the native coins. Because there's two things here, Tree Guy. We've got two things. We've got the blockchain and the technology the system sits on can be used in many things, not just banks. There's electronic information that moves around, right? So it's not just for payment. It could be involved in AI. It could be involved in information for all the EVs. EV tolls, flying cars. I mean, there's lots of things that we want to move data around very, very quickly. And the blockchain is very good at doing that. Not all blockchain, not all networks, right? But certain, like XRP certainly is. There are some very efficient ways to move information around. And the companies that use the network are going to be more efficient and profitable. Now that is very bullish. That's very exciting. Cryptology is a very exciting subject. What
like
I'm
Bank
against...
Yeah. That's like Bank of America.
Correct. And that's a very exciting an investable project. And look, folks, I'm just sorry to just repeat my point. Exactly what happens with Amazon. You bought that dip a few moments ago. I gave everybody that. I told everybody, buy it. You're up 5%, and you're up 5% right now. I wonder if anyone did. I wonder if anybody bought that dip and just made 5%. It was free money sitting there, as guaranteed can get. Does it nearly every time. So yeah, the technology is brilliant. So I want to invest in that. So who's going to use the blockchain? Well, even Amazon are using it. All online retailers are going to use the blockchain way to move. It's not just look, people are focused on, again, the comic book headline. Pepe the coin, fart coin, all of this stuff it's true. All of this stuff that was able to be created using the blockchain was the thing that drew all the speculators and gamblers in. That's what sounds exciting. Losing money doesn't sound exciting to me. I don't get excited about losing money, and I don't get excited about buying something that can go up 1,000,000% tomorrow either. Because if it can go up 1,000,000% tomorrow, it can go down 1,000,000% the next day. What am I supposed to do? Not sleep? Am I just supposed to wait, and then I'm supposed to sell? Get up at 3 o'clock in the morning and sell? I mean, what? How can you live your life like that? That's ridiculous, right? Absolutely bonkers. So I don't want to be an idiot. I don't like losing money. So I take that off the table, right? Like we talked about Apollo 13 yesterday. Take it off the table. But you talk about the technology it sits on. Great. That's good. Who's going to use that? NVIDIA are using it. Banks are using it. Institutions are using it. Governments are going to use it. Going to Mars, space, all of that is going to be on the blockchain. Now that is something I can invest in. Well, I am investing in it. Oh, no, you're not. You're not buying Fartcoin and Binky Bonk. No, I'm buying the S&P, which contains the best companies that use it. So I'm invested in your blockchain just through a real means rather than the speculative gamble. It's like buying the casino than playing the casino. I'm still in the gambling business, but one of us makes money all the time. The other one doesn't so much. Do you want to? I mean, if I said to you, I'll give you $1 million and you can walk into Caesar's palace. Think about this for a minute. This is in fact this is a really good way of explaining it. This is crypto this is not crypto. This is the coins in a nutshell. I give you $1 million, tree guy, and I say to you, you can walk into Caesar's palace right now, and you can put $1 million on blackjack. You might win $1 million, so you'll have $2 million, or you get zero, or you can buy the casino for $1 million. But if you buy the casino for $1 million, you're going to earn the money off every single person who comes in your flipping casino, and you're never going to lose. Which one are you going to do? Well,
it's going to be the casino.
Obviously, right?
I think what's attractive, though, is the money overnight thing is attractive, especially with the economy and everything else going on in people's minds. People are mentally and financially stressed, drained, however you want to put it. So I think that's another thing that crypto kind of feeds off of as well. Is that
yes, it does. Yes, it does. That's why. See, if you believe in the white paper, if you believe in Satoshi, if you believe all of the principles for cryptology, when cryptology was first created, invented, No one was sitting around thinking about Binky Bonk and Fartcoin. They were trying to build a network, a digital infrastructure to move information around. That was it. And if you believe Satoshi, the white paper, it was never supposed to be a speculative investment. It was just a way for the world to be able to use the technology to move things around, not just digital money, but information. That's all it is. It's information, right? And because that was created, then the first coin was created, and then everybody else thought, well, I can create a coin now, and I can create a coin now. I mean, I'm working on one of my own. However, mine will be different because the one that I bring out, I will burn 90% of it. I will do it in a way that protects the investors. It will be based upon the value of this show. So as the show becomes more profitable and more popular, the coin will be worth more because it's based upon something. And there'll be all kinds of promises that I make. I won't just come in and then rug pull and suddenly sell it from underneath everybody and all the rest of it. I will do. I'll also have liquidity in the pool. So there'll be money to trade inside the pool. And a lot of people have created meme coins, and there's no liquidity, and then they just they sell all the coins, and everyone's got nothing. That happens all the time. I would do the very opposite of that, and I believe that my coin would be the best coin ever. Not because I've got the best technology ever, but it's based upon my audience making money, rather than me ripping everybody off. I just think it'd be a nice, unlike what Trump did, and Melania, and what Barron was about to do. Barron was about to do it, right? They just made loads of money, dumped it on everybody, sat at the table having dinner, and everyone lost their money. And now it's like 70% down. Well, I'm not going to do that. I'm going to do everything publicly with you, and you can go, we can all do it together. Everyone makes money. Because I just don't want to rip everybody off. I mean, I don't need to rip everyone off. I don't,
Well, how would you protect from people with large amounts of money coming in and disrupting the coin, I guess?
Well, yeah, I mean, I can't stop everyone. I'm at the last stages now of knowing how it all works, right? So I'm virtually there now. I could do it tomorrow if I wanted to. But once it goes public, and all of my members have bought it, I can't stop them trading it. You could all dump it tomorrow. But there's nothing I can do about that. But one thing I can do, I've looked at this and sort of thought about it, is I can hold a certain amount that I never sell. And if I am going to sell it, I say it publicly on the show. There's lots of ways that you can protect it by knowing who owns the biggest wallet and where the wallet is. Well, let's say I own the biggest wallet. Let's say. Right? Now think about it for a minute. If I said that I've got 90% of the Martyn Lucas coin, and I showed you my wallet, and I showed you my ledger, and it's worth all this amount of money, and I said, and this is what I would do, I'd come on and say, there you go, that's how much I own. And you can see on the blockchain, this is my address. You can see what I own, all right? I'm not going to hide it. This is my address. Go and check it out. And it's that money's locked up because I've said I'm not going to sell it. Now, if I lie, I come on here and go, it was just a joke, right? I'm selling it all. Well, I'm accountable because every single person who watches my show is going to go, unsubscribe. my business, what I live on, would go to zero in 5 seconds because everyone would go, he's a liar. He was doing all this just to con everybody, and he's dumped it on everybody. Well, I would screw myself, wouldn't I? So, I'm going to be open and honest about it. But I can't stop you from selling it. If you buy it and then sell it, well, good luck to you. But that's why I'm going to build it with liquidity in the pool so it can be traded. It doesn't just go to zero the moment you sell some. That's the point.
Here in like 2030, you're gonna see Lucas coin is 100xing to $1,000.
Yeah, exactly. Yeah, people are gonna make videos on it. Going, we're all gonna short it. Do what you bloody want. I can't control that, can I? But if the underlying value remains good and the show keeps growing, which it will, I'm not gonna go anywhere. That's what you're investing. It's kind of, if you like, buying shares in this show. That's the best way I could describe it. We're not a public company. We can't sell shares. But what we can do is is have a coin which is based upon the performance of the show, and it becomes more popular and more known and more wide as the show grows. So more people want to buy it, and if you don't sell it, it goes up in price. Simple as that. And if I own a certain amount but I don't sell, and I declare that on the show, and I share with you my wallet, I can even tell you when I'm going to do it. I'm going to go, right, guys, I'm going to sell 5% of my position tomorrow. That won't crash the market, but it'll give me a bit of money. And you'll go, all right, then, fair enough, isn't it? You know, I'll do it openly and honestly. So I just think we could easily have the best coin. We could beat anyone. Anyway, that's my thought on it. Let's get ready for Amazon. We should be able, in the next minute, to be able to get the feed from Amazon. Now, all we're looking for now is a good guidance of where we're going, and we can get really, really excited about Amazon going forward. Let's have a look. It normally comes in 15 minutes. I've got a minute and a half. Got to wait a minute and a half. They always deliver it 15 minutes before.
So I guess my other question for you is, it was actually sparked up a question from someone else in the chat that actually kind of got my gears turning here. So with Amazon being more of an online sales product, could that essentially put the final coffin into Walmart?
Oh, no.
They're two different sales chains, and I don't know.
Yeah. Look, people, this is it. Amazon isn't about, when you buy Amazon, you're not just buying an online retailer at all. There's loads of online cloud services that they're involved with. They're involved in healthcare. They've got investments in all kinds of things. Very big on the blockchain. Very big in that. They are trying to take over. I forget the name of it. Was it Medical One or One Medical or someone? But there's a lot more to Amazon in their portfolio of investments than just the retail sector. So don't compare Amazon and Walmart. They're not even comparable. But actually, Walmart is a threat to Amazon rather than the other way around. Walmart's very strong. Yeah, don't think Amazon can just walk all over Walmart. They are two completely different businesses.
That's what I assumed, just because one was retail and one was more online based. They're kind of different. No, from my side of things.
Yeah, no. If you look at the prospectus, you'll hear it tonight. Tonight you'll hear where the money goes, what they do, and the profits. They have a good earnings. They normally show on. Here we go. Yeah, here we go. They've got a display and everything. It's going to be great. So let me unmute this. You're gonna. I'm really glad you've asked that now. There you go. There's the audio. Yeah, you're going to get a really good show tonight. Then look, this is it. What they do, they show you where the income comes from. They show you the nets, the obvious stuff. But let me show you this: segments, AWS, free cash flow repayments. Where's all the different sectors? Purchases for property, finance, leasing. We'll go through all this in detail in a minute. You'll hear it all. Let me just do this a minute. I always forget what this stands for. Just bear with me a second. Amazon Web. Yeah, cloud computing. That was it. I always forget what AWS stands for. Amazon Web Services Cloud Computing Company. All right? It's a cloud computing company. You don't ever think of that when you think of Amazon. You should do, but people just think, oh, I can just order stuff online. Well, there's a lot more to it than that. Anyway, let's see. How many people are with me right now? If everyone can tap the like button, please. Let's get... we got 100 likes now. Okay, cool. Smash the like button. Consider subscribing. We're about to start the Amazon earnings. Tree Guy, I'm going to wrap up with you now then, just to finish up with you. Thank you ever so much, because we've only got 13 minutes to go. Is any message you'd like to leave the world with? Your final thoughts?
My final thoughts is just be patient and invest what you can.
Simple, mate. It is really. I remember Graham Stepan, who has I think he's got 3.5, 4 million subscribers, and he does 3 videos a week, and everyone does like 1 million. He's got a really popular channel, and he's been doing it for years and years and years, and he's made lots of videos. Not as many as me, actually, but he's made a lot of videos. And he said, honestly, I only need to make one video. And I could say everything you need to know about investing in one video. But it's not going to be much of a business, is it? No one's going to watch that. It's different with us because we go live. We got, real engagement and so on. But yeah, most of the things you could learn in one video. Yes, there's a lot to learn about finance. We could discuss it for years and years and years. But the basic principles of investing and how to get wealthy and not get poor, you could say it in about 5 minutes. But I'm glad it doesn't work like that, completely like that. Otherwise, I'd have no business, would I? But it's simple. Just buy a great business that's undervalued. Own the business. When you sit in your house and you sleep, you want to know that your business is working for you. I actually think like that. When my wife goes to the shop and she buys a crate of Coca-Cola, I've joked about it on the show. I always say, buy an extra one. You're just giving a few more, percent to me. It's a bit of a joke, of course, but it is true because I see myself as an owner, and I would love nothing more. It's never going to happen, but I would love nothing more, and I'm always inspiring to do it. I would love to have more and more. I'd like to own all the shares of the S&P in the world. As I build my channel and get more and more money and earn more and more money, buy a billion, trillion, bazillion, gazillion shares of the S&P and own every business in the world. So then when I'm sleeping, all those businesses are working for me. That's what an investor is. You want to own a business, so when you go to work, I'm working for me, and my businesses that I own are working for me. I'm not trading them. I'm not messing around. I just own them, and I let them work. And when I don't think they can grow anymore, I get rid of them, which is what the S&P does. When a business fails, it gets kicked out. Something new comes in. Smarter people than me make those decisions. I don't need to do it. I just focus on earning money to be able to buy the S&P. I don't use the S&P or investing as a way as a cash machine. I'm the cash machine. You're the cash machine. We're all cash machines. We all go to work and earn some money. Now, whether you earn $1 or $1 million, it's irrelevant. If you can get 10, 20% return on what you earn, you're going to be rich. If you earn $10 a week and you spend 8 and you've got 2 left over, you're rich because you don't need the other 2. That's it. There are people I know who earn $1 million, not a week. Well, some people do. And they haven't got any money because they spend it all. There was a famous incident years ago when Elton John was made bankrupt. Elvis Presley nearly went bankrupt. Michael Jackson nearly went bankrupt because they spent more than they were earning. So if you just build yourself in an efficient way where you earn money and you save and you don't waste money and you invest you invest consistently and never lose, you'll always be all those that win big, lose big, win big, lose big. Just keep doing that. And if you keep making 10%, remember, next year, you've got what you had the first year plus 10%. So now you've got 110% doing 10%. That's what's called compounding. And 10 years from now, you can imagine where that goes. It starts to spiral and spiral and spiral.
Starts to go pretty quick the longer you sit.
Absolutely. And it doesn't take that many years. And as we get older, you start realizing, I don't mind waiting a year. A year's okay. I can wait a year. I can wait 2 years. I can wait 5 years. And as you get older, you realize actually time is so brief that it makes you more patient as you get older. When I was 20 years younger, if you said to me, I've got to spend, 4 years to grow 100,000 subscriber YouTube channel, I'd go, oh, no way. I want to do that in 5 minutes. And if I can't be bothered. Now, I've done 3.5 already. I've only got another half a year and I've 100,000. And now, and if I do another 3 years, I'll be 1 million. I can do that. Because as I get older, life speeds up. So 3 years is nothing. I'll blink and it'll be gone. So investing's the same. Don't be in a rush, like you said. Don't be in a rush. All right?
All right. Thanks, you, Martin. Take care.
Love to your family up there in Alaska. Keep safe, keep warm, keep away from the bears, and be good. All right, mate. Bye-bye. There you go. There's Tree Guy. Absolutely awesome stuff. I'm loving it, loving it, loving it. Okay, Amazon earnings, just a few seconds away. Let me Are we in members only mode? Let's have a look. No, we're not. Subscribers, Amazon, here we go. Amazon earnings, 8 minutes to go. Amazon earnings. Are you ready? That was a good conversation. Enjoyed that. All right, if everyone could tap the like button while you're here and consider subscribing to the channel if you're new as well, that'd be great. There's the audio coming through. Let's read some of the comments while I'm waiting. Invested in Walmart pretty heavy, and it's doing better than the S&P. Well, it's not doing better than the S&P. Walmart is in the S&P. So if Walmart does well, it helps with the S&P. Don't get me wrong. I got 200 shares of the S&P. I didn't get you wrong. You're okay. Is it safer to invest in stocks or crypto? Is it safer to invest in stocks? Well, that depends what stock you buy. If you buy Mullen or FFIE, then it's probably safer to buy Binky Bonk, because Binky Bonk will be around. It can't go bust. So no, if you buy a rubbish business, it's not so good. But if you buy the S&P, if you're saying to me, is it safer to buy the S&P or any crypto? Well, that's obvious. It's the S&P, no question about it. Bought Amazon at dip and Tuba. Yay, Khaled, I'm loving it. Loving it. There you go. I gave you a free trade today. No doubt about it. 100%. I went, if you bought at the bottom there, you could have made 5%. Great. And Khaled said, yeah, I just made 2%. It was very, very easy money. Very, very easy. Congratulations. I could do it all day long. But if I started doing that, then the channel becomes a pump and dump channel. You might all love it and go, well, it'd be great to watch you do it. And I could do it. It's free money. It's dead easy. But I don't need to. Just stay in where I am. But because then you pay tax on it, right? Anyway, stocks, says Uncompromised One. Thank you for the replying. I was getting worried that no one was taking me seriously. Juan, never think that. Become a member of our channel. You can be on the show. Always. Everyone gets answered. Everyone is important. No one is more important than the next man. You can earn more money from every single person coming in, so you can flip it in the other casino. All on red. 49% chance always. Nvidia looking nice today. Amazon, we showed you why in the video this morning. Amazon makes all their money primarily from AWS. Weak guidance, but I'm going to be patient because patience pays. It does. Amazon has physical stores like Walmart without any employees. You buy the product as you pick it off the shelf. Pretty neat. SoFi could be good, but the CEO talks rubbish. The CEO basically lies about his own stock. I can't stand the CEO. He absolutely talks rubbish. He makes up stories to promote his own business, and it is terrible. Proved it over and over again. Thank you, Jerry and Elba. He does not know what AW is. Yeah, I'm stupid, Clement. I'm not as smart as you. I don't know everything, and I forget things. And I have to check things, and as I forget, I have to go and remind myself what it is. So yeah, I know it sounds obvious when you say it, but I forget. I mean, I make mistakes. I forget. I don't remember everything. Absolutely correct, Danny. It's very interesting in their stores. Can't wait to see robots stocking the shelves. Martin, I don't know about AWS. I don't know about Amazon, and that's why I'm not invested. Well, you're now going to learn, right? Thank you, Northern Tree Guy and Martin. There you go, Midnight Bob. Grabbed a few as well. Hopefully you can have a nice treat this weekend thanks to your tip. Well, the idea was you either buy it and own it, because it's going to go up and down. Remember what I just said. It was a tip. It did go down. It also went straight back up. Just remember, if you wanted to make a profit, the profit was there. If you've still held it, now you're a long-term investor. When it went down, I told you it'd go straight back up, and it did. There was a 5% guaranteed profit there. Now it's going back down again. It'll keep doing this over again. So if you are an investor, you don't mind. You bought the dip and now you hold it. If you want to take the 5% profit, do that. And then what are you going to do? Got to consider what comes next. Are you going to buy it on the way up again or what? What are you going to do? But anyway, depends how you want to play it. Your channel is the first channel I've used my own money to join as a member. Gerrymandering, where you got lots of perks and benefits. You can now get my discounts over there. You can now get a free song on the music show. There's my Instagram and X. We've got 2 minutes to go before the earnings. There's Discord. You can get free one-on-one training. We don't charge you. We cover all the costs. There's members-only live streams, members-only videos. You can book in earnings. You can book in reviews. There's loads and loads of things you get as a member now. I love your content. I've made so much profit, by the way. We are bullish. Are we bullish or bearish? Are we bullish or bearish? I'm always bullish. The markets don't always agree with being bullish or bearish, but I'm always bullish. The business I own are going to grow. Otherwise, I wouldn't be in the market. I'd be sitting on cash. And I proved to you that holding cash is the biggest waste of time, biggest load of nonsense ever. Space hold, or still buy a few times a month like me. I haven't had a chance to do space today. We had an interview. Sorry about that. I'll try again tomorrow. Right, Amazon earnings. Here we go. 1 minute to go. Here we go. There's the audio. Amazon earnings coming up. Stand by. Is XRP in trouble? Only 57% of you said no. That's a worry, isn't it? 58% said no. There you go. It's a few more. Anyway, I'd be concerned about that if I was an investor in it. I'd want 100% to say no. It's way too low. Okay. Let's listen in. Let me play the audio. Okay, here we go. Now, they could be 1 or 2 minutes late. That's typical. We're listening to the audio. I'm waiting for it to start. Welcome, everybody who's listening in with me. I just realized I can't pump out the music on the extra channel. Got to keep remembering that. Okay, they're still playing music. Stand by. Just waiting.
Thank you for standing by. Good day, everyone, and welcome to the Amazon.com fourth quarter 2024 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded. And for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q4 2024 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2023. Our comments and responses to your questions reflect management's views as of today, February 6th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $187.8 billion in revenue, up 10% year over year. Given the way the dollar strengthened throughout the quarter, we saw $700 million more of foreign exchange headwind than we anticipated at guidance. Without that headwind, revenue would have been 11% year over year and exceeded the top end of our guidance. Operating income was $21.2 billion, up 61% year over year, and trailing 12-month free cash flow adjusted for equipment finance leases was $36.2 billion, up $700 million year over year. We're pleased with the invention, customer experience improvements, and results delivered in 2024 and have a lot more planned in 2025. I'll start by talking about our stores business. We saw 10% year-over-year revenue growth in our North America segment and 9% year-over-year in our international segment, excluding the impact from foreign exchange rates. Our continued focus on expanding selection, lowering prices, and improving convenience drove strong unit growth that even outpaced our revenue growth. We continue to add to our broad range of selection, giving customers choice across a variety of price points. We welcome notable brands to our store throughout 2024, including Clinique, Estée Lauder, Oura Rings, and Armani Beauty. We continue to add to the hundreds of millions of products offered from our selling partners, who made up 61% of items that we sold in 2024, our highest annual mix of third-party seller units ever. We also launched Amazon Haul for U.S. customers in Q4, which offers customers an engaging shopping experience that brings ultra-low price products into one convenient destination. It's off to a very strong start. Customers continue to want Amazon to be the place they rely on for sharp pricing. In the fourth quarter, consumers saved more than $15 billion with our low everyday prices and record-setting events during Prime Big Deal Days in October and Black Friday and Cyber Monday around Thanksgiving. Additionally, Profitero's annual pricing study found that entering the holiday season, Amazon had the lowest online prices for the 8th year in a row, averaging 14% lower prices on average than other leading retailers in the U.S. Our speed of delivery continues to accelerate, and 2024 was another record-setting year for Prime members. We expanded the number of same-day delivery sites by more than 60% in 2024, which now serve more than 140 metro areas, and overall, we delivered over 9 billion units the same or next day around the world. Our relentless pursuit of better selection, price, and delivery speed is driving accelerated growth in Prime membership. For just $14.99 a month, Prime members get unlimited free shipping on 300 million items, often same-day or one-day delivery, exclusive shopping events like Prime Day, access to a vast collection of premium programming and live sports on Prime Video, ad-free listening of 100 million songs and podcasts with Amazon Music, access to unlimited generic prescriptions for only $5 a month, unlimited grocery delivery on orders over $35 from Whole Foods Market and Amazon Fresh for $9.99 a month, a free Grubhub Plus membership with free unlimited delivery, and our latest benefit of a 10-cent per gallon fuel discount at BP, Amoco, and AMPM stations. When you think about this as a whole, and also compared to many other membership services that are comparably or more expensively priced that offer just one benefit like video, Prime is a screaming deal, and we have more coming for our Prime members in 2025. We also remain squarely focused on cost to serve in our fulfillment network, which has been a meaningful driver of our increased operating income. We've talked about the regionalization of our U.S. network. We've also recently rolled out our redesigned U.S. inbound network. While still in its early stages, our inbound efforts have improved our placement of inventory so that even more items are closer to end customers. Ahead of Black Friday in November, we'd improved the percentage of ordered units available in the ideal building by over 40% year over year. We've also spent considerable time optimizing the number of items we send customers in the same package, which reduces packaging, is more convenient for customers and less expensive for us to fulfill. And our per unit transportation costs continue to decline as we build out and optimize our last mile network. Overall, we've reduced our global cost to serve on a per unit basis for the second year in a row, while at the same time increasing speed, improving safety, and adding selection. As we look to 2025 and beyond, we see opportunity to reduce costs again as we further refine inventory placement, grow our same-day delivery network, and accelerate robotics and automation throughout the network. In advertising, we remain pleased with the strong growth on a very large base, generating $17.3 billion of revenue in the quarter and growing 18% year over year. That's a $69 billion annual revenue run rate, more than double what it was just 4 years ago at $29 billion. Sponsored products, the largest portion of ad revenue, are doing well, and we see runway for even more growth. We also have a number of newer streaming offerings that are starting to become significant new revenue sources. On the streaming video side, we wrapped up our first year of Prime Video ads, and we're quite pleased with the early progress and head into this year with momentum. We've made it easier to do full funnel advertising with us. Full funnel is from the top of the funnel with broad reach advertising that drives brand awareness to mid funnel, where sponsored brands let companies specify certain keywords and audiences to attract people to their detail pages or brand store on Amazon, to bottom of the funnel, where sponsored products help advertisers surface relevant product ads to customers at the point of purchase. We make this easy for brands to sign up for and deploy across our growing advertising. We also have differentiated audience features that leverage billions of customer signals across our stores and media destinations. From Amazon Marketing Cloud's secure clean rooms, providing advertisers the ability to analyze data, produce core marketing metrics, and understand how their marketing performs across various channels, to our new multi-touch attribution model that helps advertisers understand how their marketing is working. If an advertiser uses streaming TV, display, sponsored products, and other ad types in their campaign, multi-touch attribution will show the relative contribution of each to their sales. Moving on to AWS. In Q4, AWS grew 19% year over year and now has a $115 billion annualized revenue run rate. AWS is a reasonably large business by most folks' standards, and though we expect growth will be lumpy over the next few years as enterprise adoption cycles, capacity considerations, and technology advancements impact timing, it's hard to overstate how optimistic we are about what lies ahead for AWS's customers and business. I spent a fair bit of time thinking several years out, and while it may be hard for some to fathom a world where virtually every app has generative AI infused in it, with inference being a core building block just like compute, storage, and database, and most companies having their own agents that accomplish various tasks and interact with one another, this is the world we're thinking about all the time. And we continue to believe that this world will mostly be built on top of the cloud, with the largest portion of it on AWS. To best help customers realize this future, you need powerful capabilities at all three layers of the stack. At the bottom layer, for those building models, you need compelling chips. Chips are the key ingredient in the compute that drives training and inference. Most AI compute has been driven by NVIDIA chips, and we obviously have a deep partnership with NVIDIA and will for as long as we can see into the future. However, there aren't that many generative AI applications at large scale yet. And when you get there, as we have with apps like Alexa and Rufus, costs can get steep quickly. Customers want better price performance, and it's why we built our own custom AI silicon. Trainium 2 just launched at our AWS reInvent conference in December, and EC2 instances with these chips are typically 30 to 40% more price performant than other current GPU-powered instances available. That's very compelling at scale. Several technically capable companies like Adobe, Databricks, Poolside, and Qualcomm have seen impressive results in early testing of Trainium 2. It's also why you're seeing Anthropic build their future frontier models on Trainium 2. We're collaborating with Anthropic to build Project Rainier, a cluster of Trainium 2 Ultra servers containing hundreds of thousands of Trainium 2 chips. This cluster is going to be 5 times the number of exaflops.
Okay, here's your second chance to trade Amazon. So you bought the bottom, sold at the top.
We're already
do it again
or
own it. It's up to you.
Which we expect to preview late in 25 and defining Trainium 4 thereafter. Building outstanding performing chips that deliver leading price performance has become a core strength of AWS's, starting with our Nitro and Graviton chips in our core business, and now extending to Trainium and AI, and something unique to AWS relative to other competing cloud providers. The other key component for model builders is services that make it easier to construct their models. I won't spend a lot of time in these comments on Amazon SageMaker AI, which has become the go-to service for AI model builders to manage their AI data, build models, experiment, and deploy these models, except to say that SageMaker's HyperPod capability, which automatically splits training workloads across many AI accelerators, prevents interruptions by periodically saving checkpoints and automatically repairing faulty instances from their last saved checkpoint and saving training time by up to 40%. It continues to be a differentiator, received several new compelling capabilities at reInvent, including the ability to manage costs at a cluster level and prioritize which workloads should receive capacity when budgets are reached, and is increasingly being adopted by model builders. At the middle layer, for those wanting to leverage frontier models to build Gen AI apps, Amazon Bedrock is our fully managed service that offers the broadest choice of high-performing foundation models with the most compelling set of features that make it easy to build a high-quality generative AI application. We continue to iterate quickly on Bedrock, announcing Luma AI, Poolside, and over 100 other popular emerging models to Bedrock and reInvent. In short order, we also just added DeepSeek's R1 models to Bedrock and SageMaker. And additionally, we delivered several compelling new Bedrock features at reInvent, including prompt caching, intelligent prompt routing, and model distillation, all of which help customers achieve lower cost and latency in their inference. Like SageMaker AI, Bedrock is growing quickly and resonating strongly with customers. Related, we also just launched Amazon's own family of frontier models in Bedrock called Nova. These models compare favorably in intelligence against the leading models in the world, but offer lower latency, lower price, about 75% lower than other models in Bedrock, and are integrated with key Bedrock features like fine-tuning, model distillation, knowledge bases or RAG, and agentic capabilities. Thousands of AWS customers are already taking advantage of the capabilities and price performance of Amazon Nova models, including Palantir, Deloitte, SAP, Dentsu, Fortinet, Trellix, and Robinhood, and we've just gotten started. At the top layer of the stack, Amazon Q is the most capable generative AI-powered assistant for software development and to leverage your own data. You may remember that on the last call, I shared the very practical use case where Q Transform helped save Amazon's teams $260 million and 4,500 developer years in migrating over 30,000 applications to new versions of the Java JDK. This is real value, and companies asked for more, which we oblige with our recent deliveries of Q transformations that enable moves from Windows.NET applications to Linux, VMware to EC2, and accelerates mainframe migrations. Early customer testing indicates that Q can turn was going to be a multi-year effort to do a mainframe migration into a multi-quarter effort, cutting by more than 50% the time to migrate mainframes. This is a big deal, and these transformations are good examples of practical AI. While AI continues to be a compelling new driver in the business, we haven't lost our focus on core modernization of companies' technology infrastructure from on-premises to the cloud. We signed new AWS agreements with companies including Intuit, PayPal, Norwegian Cruise Line Holdings, Northrop Grumman, the Guardian Life Insurance Company of America, Reddit, Japan Airlines, Baker Hughes, the Hertz Corporation, Redfin, Chime Financial, Asana, and many others. Consistent customer feedback from our recent AWS reInvent gathering was appreciation that we're still inventing rapidly in non-AI key infrastructure areas like storage, compute, database, and analytics. Our functionality leadership continues to expand, and there were several key launches customers were abuzz about, including Amazon Aurora DSQL, our new serverless distributed SQL database that enables applications with the highest availability, strong consistency, Postgres compatibility, and 4 times faster reads and writes compared to other popular distributed SQL databases. Amazon S3 Tables, which make S3 the first cloud object store with fully managed support for Apache Iceberg for faster analytics. Amazon S3 Metadata, which automatically generates queryable metadata, simplifying data discovery, business analytics, and real-time inference to help customers unlock the value of their data in S3, and the next generation of Amazon SageMaker, which brings together all the data, analytics services, and AI services into one interface to do analytics and AI more easily at scale. As 2024 comes to an end, I want to thank our teammates and partners for their meaningful impact throughout the year. It was a very successful year across almost any dimension you pick. We're far from done and look forward to delivering for customers in 2025. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $187.8 billion, an 11% increase year over year, excluding the impact of foreign exchange. This equates to an approximate $900 million headwind from FX in the quarter, which is about $700 million higher than what we'd anticipated in our Q4 guidance range. Excluding that additional FX headwind, we would have exceeded the top end of our revenue guidance range. Worldwide operating income was $21.2 billion, our largest operating income quarter ever, and was $1.2 billion above the high end of our guidance range. Across all segments, we continue to innovate for customers while operating more efficiently at the same time. In the North America segment, fourth quarter revenue was $115.6 billion, an increase of 10% year over year. International segment revenue was $43.4 billion, an increase of 9% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year, as our focus on low prices, broad selection, and fast shipping continues to resonate with customers. Shifting to profitability, North America segment operating income was $9.3 billion, an increase of $2.8 billion year over year. Operating margin was 8%, up 190 basis points year over year. In the international segment, operating income was $1.3 billion, an improvement of $1.7 billion year over year. Operating margin was 3%, up 400 basis points year over year. This marks the 8th consecutive quarter where we've seen year-over-year margin improvement in both the North America and international segments. 2024 also marks the second year in a row where we've lowered our global cost to serve on a per-unit basis. In the fourth quarter, we saw strong productivity in our transportation network from improved inventory placement, higher units per package, and reduced travel distances. We also saw improved productivity in our fulfillment centers. Overall, our teams executed extremely well throughout the quarter, and particularly during our peak seasons. I want to thank them for all they do to deliver for our customers. Looking ahead, we have several opportunities to keep lowering our costs through even better inventory placement, which also allows us to deliver items to customers faster. In the U.S., we're tuning our inbound network and continuing to expand our same-day delivery network. Globally, we're adding automation and robotics throughout our network. While these efforts will take time to implement and progress may not be linear, we have a good plan to continue to drive improvements in our cost structure. Advertising remains an important contributor to profitability in the North America and international segments. This quarter, we saw strong advertising revenue growth on an increasingly large base. We will also continue to invest in experiences that have potential to be important to customers in Amazon long-term, in areas like Alexa, healthcare, and grocery, as well as Kuiper, including the planned launches of our production satellites in the coming months. As a reminder, we currently expense the majority of the costs associated with the development of our satellite network. We will capitalize certain costs once the service achieves commercial viability, including sales to customers. Moving next to our AWS segment, revenue was $28.8 billion, an increase of 19% year over year. AWS now has an annualized revenue run rate of $115 billion. During the fourth quarter, we continued to see growth in both generative AI and non-generative AI offerings, as companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premise to the cloud, and tap into the power of generative AI. Customers recognize to get the full benefit of generative AI, they have to move to the cloud. AWS reported operating income of $10.6 billion, an increase of $3.5 billion year over year. This is a result of strong growth, innovation in our software and infrastructure to drive efficiencies, and continued focus on cost control across the business. As we've said in the past, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making. Additionally, we increased the estimated useful life of our servers starting in 2024, which contributed approximately 200 basis points to the AWS margin increase year over year in Q4. Now turning to our capital investments. As a reminder, we define these as a combination of cash CapEx plus equipment finance leases. Capital investments were $26.3 billion in the fourth quarter, and we think that run rate will be reasonably representative of our 2025 capital investment rate. Similar to 2024, the majority of the spend will be to support the growing need for technology infrastructure. This primarily relates to AWS, including to support demand for our AI services, as well as tech infrastructure to support our North America and international segments. Additionally, we're continuing to invest in capacity for our fulfillment and transportation network to support future growth. We're also investing in same-day delivery facilities and our inbound network, as well as robotics and automation to improve delivery speeds and to lower our cost to serve. These capital investments will support growth for many years to come. Turning to our revenue guidance for Q1, net sales are expected to be between $151 billion and $155.5 billion. I'd like to highlight two items impacting our Q1 revenue guidance. First, we estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a headwind of approximately $2.1 billion in Q1 year over year, or 150 basis points. As a reminder, global currencies can fluctuate during the quarter, and just as we saw in Q4 with the strengthening of the dollar versus most other currencies. Second, a reminder that we are comping the impact of last year's leap year. The extra day contributed approximately $1.5 billion of additional net sales across our businesses in Q1 2024, or about 120 basis points to the year-over-year growth rate, which impacted all segments. Q1 operating income is expected to be between $14 billion and $18 billion. This guidance includes the estimated impact of certain updates to the useful life of our fixed assets. I'll provide a bit more detail in a moment, but on an aggregate basis, we estimate this will decrease full year 2025 operating income by approximately $400 million for the assets on our balance sheet as of December 31st, 2024. First, in Q4, we completed a useful life study for our servers and networking equipment and observed an increased pace of technology development, particularly in the area of artificial intelligence and machine learning. As a result, we're decreasing the useful life for a subset of our servers and networking equipment from 6 years to 5 years, beginning in January 2025. We anticipate this will decrease full year 2025 operating income by approximately $700 million. In addition, we also early retired a subset of our servers and network equipment. We recorded a Q4 2024 expense of approximately $920 million from accelerated depreciation and related charges, and expect this will also decrease full year 2025 operating income by approximately $600 million. Both of these server and network equipment useful life changes primarily impact our AWS segment. Lastly, we also completed a useful life study for certain types of heavy equipment used in our fulfillment centers and are increasing the useful life from 10 years to 13 years, beginning in January 2025. We anticipate this will increase full year 2025 operating income by approximately $900 million. As we turn the page to 2025, we're energized by the great work our teams have delivered. We'll remain focused on driving an even better customer experience, and we believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star, then 1 on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then 1 on your touch-tone telephone at this time. Please hold while we pull for questions. Thank you. Our first question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. Two quick questions. So, Brian, that's $100 billion capex we should think about in 25. And then, Andy, would you describe the AWS growth as being currently moderated down by supply constraints? Do you see those across the industry, or do you see those materially impacting AWS today? Thank you very much.
So I'll take both those, Andy. On the CapEx side, as Brian mentioned earlier, we've
got a goal in the chat if you want me to carry on and do a guerrilla
and I think that is
analysis at the end of the show. Any Teton super chats, whatever it is, we'll do it.
The vast majority of that CapEx spend is on AI for AWS. It's, the way the AWS business works and the way the cash cycle works is that the faster we grow, the more CapEx we end up spending, because we have to procure data center and hardware and chips and networking gear ahead of when we're able to monetize it. We don't procure it unless we see significant signals of demand. And so when AWS is expanding its CapEx, particularly in what we think is one of these once-in-a-lifetime type of business opportunities like AI represents, I think it's actually quite a good sign, medium to long term, for the AWS business. And I actually think that spending this capital to pursue this opportunity, which, from our perspective, we think virtually every application that we know of today is going to be reinvented with AI inside of it, and with inference being a core building block, just like compute and storage and database. If you believe that, plus that altogether new experiences that we've only dreamed about are going to actually be available to us with AI, AI represents for sure the biggest opportunity since cloud, and probably the biggest technology shift and opportunity in business since the internet. And so I think that both our business, our customers, and shareholders will be happy medium to long term that we're pursuing the capital opportunity and the business opportunity in AI. We also have CapEx that we're spending this year in our stores business, really with an aim towards trying to continue to improve the delivery speed and our cost to serve. And so you'll see us expanding the number of same-day facilities from where we are right now. You'll also see us expand the number of delivery stations that we have in rural areas so we can get items to people who live in rural areas much more quickly. And then a pretty significant investment as well on robotics and automation so we can take our cost to serve down and continue to improve our productivity. So that's the CapEx piece. I think the second question you asked, Mark, is really around AWS growth and whether this is being moderated down at all by supply chain constraints. It is hard to complain when you have a multi-billion-dollar annualized revenue run rate business in AI like we do, and it's growing triple-digit percentage year over year. It's hard to complain. However, it is true that we could be growing faster if not for some of the constraints on capacity. And they come in the form of I would say chips from our third-party partners coming a little bit slower than before, with a lot of midstream changes. It take a little bit of time to get the hardware actually yielding the percentage healthy and high quality servers we expect. It comes with our own big new launch of our own hardware and our own chips in Trainium 2, which we just went to general availability at reInvent, but the majority of the volume is coming in really over the next couple quarters and next few months. It comes in the form of power constraints, where I think, the world is still constrained on power from where I think we all believe we could serve customers if we were unconstrained. There are some components in the supply chain, like motherboards too, that are a little bit short in supply for various types of servers. So, I think the team has done a really good job scrapping and providing capacity for our customers so they can grow. We're still growing at a pretty reasonable clip, as I mentioned earlier, but I do think we could be growing faster if we were unconstrained. I predict those constraints really start to relax in the second half of 25. As I said, I think we could be growing faster, even though we're growing at a pretty good clip today.
And our next question is from Eric Sheridan with Goldman Sachs. Please proceed.
Thanks so much for taking the question. I'll just ask one that's building on Mark's questions there. Andy, when you think about the news that came out of China over the last couple of weeks and think longer term about bending the cost curve lower with AI, I understood the commentary around CapEx for 2025. But when you look at where you sit in the industry, the move towards open source, elements of custom silicon, how do you think about bending the cost curve and either speeding up or amplifying time deployment to market, or possibly, higher returns on capital for AI? Thanks so much.
Yeah. Well, I'd say a few things because there are a few questions built into that. First of all, I think like many others, we were impressed with what DeepSeek has done. I think in part impressed with some of the training techniques, primarily in flipping the sequencing of reinforcement learning being earlier and without the human in the loop. We thought that was interesting ahead of the supervised fine-tuning. We also thought some of the inference optimizations they did were also quite interesting. For those of us who are building frontier models, we're all working on the same types of things. We're all learning from one another. I think you have seen and will continue to see a lot of leapfrogging between us. There is a lot of innovation to come. And, I think, if you run a business like AWS and you have a core belief like we do, that virtually all the big generative AI apps
it's who you know.
Multiple model types, and different customers are going to use different models for different types of workloads. You're going to provide as many leading frontier models as possible for customers to choose from. And that's what we've done with services like Amazon Bedrock. And it's why we moved so quickly to make sure that DeepSeek was available both in Bedrock and in SageMaker, faster than you saw from others. And we already have customers starting to experiment with that. I think what's, one of the interesting things over
I've just
the last
spoken to Gorilla,
couple of weeks,
and I've just showed you on the screen. I've got more information coming in. If you want me to do a Gorilla analysis at the end of this, 10 super chats, even for $1, I'll do it. It's up to you. Only one person's done it so far.
Technology component. In this case, we're really talking about inference. That somehow it's going to lead to less total spend in technology, and we have never seen that to be the case. We did the same thing in the cloud, where when we launched AWS in 2006, where we offered S3 object storage for 15 cents a gigabyte and compute for 10 cents an hour, which of course is much lower now, many years later. People thought that people would spend a lot less money on infrastructure technology, and what happens is companies will spend a lot less per unit of infrastructure, and that is very, very useful for their businesses, but then they get excited about what else they could build that they always thought was cost prohibitive before, and they usually end up spending a lot more in total on technology once you make the per unit cost less. And I think that is very much what's going to happen here in AI, which is the cost of inference will substantially come down. What you heard the last couple of weeks out of DeepSeek is a piece of it, but everybody is working on this. I believe the cost of inference will meaningfully come down. I think it will make it much easier for companies to be able to infuse all their applications with inference and with generative AI. And I think it's going to, if you run a business like we do, where we want to make it as easy as possible for customers to be successful building customer experiences on top of our various infrastructure services, the cost of inference coming down is going to be very positive for customers and for our business.
And the next question is from Doug Anmuth with J.P. Morgan. Please proceed.
Thanks for taking the questions. I'll stick with AWS to start. Just, Brian, maybe you can talk a little bit more about margins there, just given that they've kind of moved between the mid-20s to high 30s over the past 2 years. How should we think about that more normalized, especially as you're investing that much more in generative AI? And then just on the stores side, can you talk about the impact of less volume going through your shipping partner, UPS, going forward? And are you able to manage that incremental shipping that's required? Thanks.
Yeah, sure, Doug. Thanks for your question. First on AWS, yeah, we have seen a lot of fluctuation in operating margin in AWS. And, we've said historically that they will be lumpy, as you say, over time. And, the stage we're in right now, AI is still early stage. It does come originally with lower margins and a heavy investment load, as we've talked about. And in the short term, over time, that should be a headwind on margins. But over the long term, we feel the margins will be comparable to non-AI business as well. So, we're very pleased with the strong growth, focus on driving efficiencies in all of our data centers, saving power, reusing power in new generative AI applications, and just generally reducing costs. So very pleased with the performance of the AWS team, and look forward to strong 2025.
I'll take the UPS one, which is really UPS has been a partner of ours for many years, and we expect that we'll continue to be partners with UPS for many years. As you know, increasingly over the last several years, particularly accelerated by the pandemic, we have shipped a much larger percentage of our shipments through our own logistics network, our own last mile transportation network. And yeah, I think that's in part because we needed to scale up so fast in the pandemic with everything being shut down and needing to serve more of the total market segment share of retail units during that time, and needing to do it at a low cost structure because, of course, our customers expect low prices, and that's the nature of the business. I think UPS has decided that serving Amazon is lower margin for them, and so I think they've walked away from some of the volume that they otherwise could have had in the partnership. We're able to handle it with our own logistics capability, and we'll see how it continues to evolve.
And the next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed.
Thanks for taking my questions. Andy, maybe to drill a little bit into the robotics acceleration that you talked about, any new data points and things you can share on learnings from Shreveport, and how do we think about sort of the scalability of savings or the timing that we could see a real impact on profitability from robotics? And then maybe just a bigger picture, Gen AI, GPU-enabled changes. Do you have other examples of how you see the Amazon retail shopping experience changing throughout 2025 as you're better using Gen AI or GPU-enabled machine learning and things?
Yeah. Okay. Well, on the robotics piece, what I would tell you is, since we've been pretty substantially integrating robotics into our fulfillment network over the last many years, we have seen cost savings, and we've seen productivity improvements, and we've seen safety improvements. And so we have already gotten a significant amount of value out of our robotics innovations. What we've seen recently, and I think maybe part of what you're referencing in Shreveport, is that the next tranche of robotics initiatives have started hitting production, and we've put them all together for the first time as part of an experience in our Shreveport facility. And we are very, very encouraged by what we're seeing there, by both the speed improvements that we're seeing, the productivity improvements, the cost to serve improvements. It's still relatively early days, and these all being put together are only in Shreveport at this point, but we have plans now to start to expand that and roll that out to a number of other facilities in the network, some of which will be our new facilities and others of which will will retrofit existing facilities to be able to use those same robotics innovations. I'll also tell you that this group of, call it a half dozen or so new initiatives is not close to the end of what we think is possible with respect to being able to use robotics to improve the productivity, cost to serve, and safety in our fulfillment network. And we have kind of the next wave that we're starting to work on now. But I think this will be a many-year effort as we continue to tune different parts of our fulfillment network where we can use robotics. And we actually don't think there are that many things that we can't improve the experience with robotics. On your other question, which is, I think, really about how we might use AI in other areas of the business than AWS, maybe more, and I think you asked about our retail business. The way I would think about it is that there's kind of two macro buckets of how we see people, both ourselves inside Amazon as well as other companies using AWS, how we see them getting value out of AI today. The first macro bucket, I would say, is really around productivity and cost savings. And in many ways, this is the lowest hanging fruit in AI. And you see that all over the place in our retail business. For instance, if you look at customer service and you look at the chatbot that we've built, we completely re-architected it with generative AI. It's delivering, it already had pretty high satisfaction. It's delivering 500 basis points better satisfaction from customers with the new generative AI infused chatbot. If you look at our millions of third-party selling partners, one of their biggest pain points is because we put a high premium on really organizing our marketplace so that it's easy to find things. There's a bunch of different fields you have to fill out when you're creating a new product detail page, but we've built a generative AI application for them where they can either fill in just a couple lines of text or take a picture of an image or point to a URL, and the generative AI app will fill in most of the rest of the information they have to fill out, which speeds our getting selection on the website and easier for sellers. If you look at how we do inventory management and trying to understand what inventory we need in what facility at what time, the generative AI applications we've built there have led to 10% better forecasting on our part and 20% better regional predictions. In our robotics, we were just talking about the brains in a lot of those robotics are generative AI infused that do things like tell the robotic claw, what's in a bin, what it should pick up, how it should move it, where it should place it in the other bin that it's filling. So it's really in the brains of most of our robotics. So we have a number of very significant, I'll call it productivity and cost savings efforts in our retail business. They're using generative AI, and again, it's just a fraction of what we have going. I'd say the other big macro bucket are really altogether new experiences. And again, you see lots of those in our retail business, ranging from Rufus, which is our AI infused shopping assistant, which continues to grow very significantly, to things like Amazon Lens, where you can take a picture of a product that's in front of you. Check it out in the app. You can find it in the little box at the top. You take a picture of an item in front of you, and it uses computer vision and generative AI to pull up the exact item in a search result, to things like sizing, where we basically have taken the catalogs of all these different clothing manufacturers and then compared them against one another so we know which brands tend to run big or small relative to each other, so that when you come to buy a pair of shoes, for instance, it can recommend what size you need, to even what we're doing in Thursday Night Football, where we're using generative AI for really inventive features like defensive alerts, where we predict which player is going to blitz the quarterback, or defensive vulnerabilities, where we're able to show viewers what area of the field is vulnerable. So we're using it really all over our retail business and all the businesses in which we're in. We've got about 1,000 different generative AI applications we've either built or in the process of building right now.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed.
Great, thanks. Could you talk about the current speed of delivery, maybe how much more room to go there, and how is it driving the Everyday Essentials business? And then somewhat relatedly, any further color on inbound network efficiencies you would expect to see this year as you guys try to continue to lower the cost to serve? Thank you.
Yeah, I would say on speed of delivery that we measure this very carefully, and we measure both what the conversion rate is of somebody who views a product detail page with a faster delivery promise versus those that are slower, as well as what we see downstream from customers once they've bought with a fast promise and what they end up buying throughout the year. And we have not yet seen diminishing returns and being able to continue to improve the speed of delivery. It doesn't mean that there won't be instances in which people are happy to take products later. You know, we have a program where if people want to pick a day during the week where they want to combine a bunch of their shipments and have it delivered then to be more sustainable and more environmentally friendly, they can. And we have plenty of customers who choose that, but we time in and time out see that people choose to buy from us more frequently when we're able to deliver to their homes or wherever they are much more quickly, and it leads to their actually using us for more of their everyday purchases when we can deliver more quickly. And I think that if you look at what we're doing with Prime Air, the promise there is for a number of items that we'll be able to deliver items to customers inside an hour. And I think when you're ordering Everyday Essentials where you need something more quickly, it's a big deal. And you see it's had a big impact on our Everyday Essentials. It's had a big impact on our pharmacy business, where people are able to get items same day now in lots of cities throughout the U.S., and they're just using us much more frequently than they had before. On the inbound network efficiencies, what I would tell you is we've made a pretty significant architectural change in our inbound network that we've been working on for the better part of a year, that we rolled out just a few months ago. Again, what we find when we make big architectural changes like this is that you tend to get some low-hanging fruit efficiencies early, but then there's all sorts of tuning and refinement you have to do once you actually see it working live across the really vast network. And we have all sorts of ways here where I think it's early, and I think we're going to get additional efficiencies throughout the year. But I expect that we'll have opportunities to keep taking our cost to serve down this year, and that'll be a big part of it.
And our final question comes from the line of Michael Morton with MoffettNathanson. Please proceed.
Hi, thank you so much for the question. I wanted to follow up on Andy's remarks about how you're using AI within the Amazon e-commerce experience. But I wanted to talk about the other side of the coin, and that's really the e-commerce discovery process that leads people to Amazon. There's a lot of companies rolling out agents and assistants, and I would love to hear how Amazon is planning for potential disruption in this funnel and what the plans are. You spoke about Rufus, maybe make that more prominent, but what you think the changes coming to the e-commerce funnel over the next several years would be great.
Well, I would say that I think retailers, ourselves, and probably lots of other retailers are all going to have their own say on how they want to interact with agents. I think that it's an emerging space. And if you think about the investments that we've made in our fulfillment network, in our website, in all the selection that we've built, how we organize it, most retailers are going to have kind of terms in which they're going to interact with agents, and we'll be no different that way. And I think that I do think that Rufus, if you look at how it impacts the customer experience, and if you actually use it month to month, it continues to get better and better. It's already, if you're buying something and you're on a product detail page, our product detail pages provide so much information that sometimes it's hard if you're trying to find something quickly to scroll through and figure and find that little piece of information. And so we have so many customers now who just use Rufus to help them find a quick fact about a product. They also use Rufus to figure out how to summarize customer reviews, so they don't have to read 100 customer reviews to get a sense of what people think about that product. If you look at the personalization, really most prominently today, your ability to go into Rufus and ask what's happened to an order, or what did I just order, or can you pull up for me this item that I ordered 2 months ago. The personalization keeps getting much better. And so, we expect throughout 2025
new all-time high
of occasions where you're not sure what you want to buy and you want help from Rufus are going to continue to increase and be more and more helpful to customers.
Thank you for joining us on the call today and for your questions. A replay will be available on the Investor Relations website for at least 3 months. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
There we go. Thank you very much indeed. That was our Amazon earnings. We're now going to move over to Gorilla. You asked why it's going up, so I got on the phone and I spoke directly with Gorilla. There is my text to Gorilla, and there is my reply. And I said, what's going on? They gave me some information. I'm now going to do a special for you. I asked if you could get 10 super chats, and you did it. So thank you very much indeed. And you also voted for it as well. So there you go. So we're going to go over to a Gorilla live analysis, live information right now. So the event is ready to rock and roll. Let me give you the event in the chat. It's pinned to the top. Here it is. If you stay right where you are, it'll take you right there automatically, or you can click on that. This is what it looks like. This is where I'm going to be right now. Going to do this very, very quickly. It's overtime. I should have been finished hours ago, but I'm doing this. I think Vanessa was asking about it, so I got on the phone. I spoke directly to Gorilla, and I've got some information for you, why it's moving today and what is going on. So if you want to know, you're in the right place. There you go. Fantastic, right? You want to know? I mean, do you get this on CNBC and Bloomberg? I don't think so. So there you go. Called directly up to Gorilla and found out. So there you go. Are you ready? Time to rock and roll. So join me now on the Gorilla Gorilla analysis information directly from the company. I'm going to bring that to you right now. So here we go. Click on the link or join me right now. Bye-bye for now. See ya.